In London, and here are your top stories. All in, the Fed's Christopher Waller says he would support another 75 basis point hike, saying the US central bank will do what it can to re-establish price stability. Crypto on edge, Bitcoin struggles to hang on to the $20,000 handle, continuing its recent freefall amid current volatility. And in France, Emmanuel Macron loses his absolute majority in Parliament after an unexpected surge in support for the far right. Okay, let's take a look at the futures on a day, of course, where the US is looking at a bank holiday. It's Juneteenth in the United States. Nonetheless, we can get a cue in terms of US futures shortly. European futures pointing gains of 0.4%. Let's see how things open in consideration, of course, the politics of France and the continuing readjustment to that historic week when it came to central bank action last week. Of course, for the context, the S&P currently down, S&P 500 year-to-date 22%, and over in Europe, European stocks currently down around 17% year-to-date. The FTSE 100 is currently flat, range-bound, just gaining 3 points or so. We'll see how things play out in terms of the other opens. We're talking again, and we'll get the details about the implications for the reform agenda of Emmanuel Macron later in this hour. The Spanish IBEX currently up 0.4% over in France. There you see gains of 0.3%, despite the fact that Macron has lost his supermajority in Parliament. He's going to have to work with other parties to push through any kind of policy, significant domestic policy, gaining 18 points over in France. Let's switch it on and see how things are playing out then cross asset. And of course, the futures, as we said, it is a bank holiday in the United States. You're looking at futures, though, when those markets do reopen, of gains of 0.5%. A bit of softness coming through for the US dollar, currently down 0.3%. Iron ore is lower by almost, look at that, almost 8%. Renewed concerns about the demand for iron ore, and we know that some of the steel makers have idled some of their furnaces as well. So that's pressuring the material space when it comes to iron ore. Bitcoin, 20,000. Is 18,300 the next technical level? That is, according to some within this space. Of course, concerns about what's happening in DeFi. Of course, decentralized finance. We'll break that story out for you as well later in the show. Currently down 2.5% for Bitcoin. Okay, here's what central bankers and politicians had to say about the inflation problem over the weekend.
In the sense of the outcome of our forecast, yes, we've underestimated inflation.
The recession risks are going up.
We've had high inflation in the first half of this year, and that locks in high inflation really for the entire year.
My colleagues and I are acutely focused on returning inflation to our 2% objective.
I'm using every lever available to me to bring down prices.
The Fed is all in on reestablishing price stability.
And our nations are working together to stabilize global energy markets.
If we do see greater evidence that the current high level of inflation is becoming embedded in pricing behavior by firms, in wage setting behavior by firms and workers, then that will be the trigger.
I still think that the Fed and most market participants are underestimating the gravity of our situation.
Okay, let's get into the key market drivers with MLive's Ven Ram. Good morning, Ven Ram. Where are the markets in terms of repricing these more hawkish central banks?
Morning, Tom. The markets may be on a holiday, but the investors don't get a break at all. And that's going to be a key theme for going forward because, as we just showed, inflation is the big story for 2022 and will continue to be the big story for the first half of 2023, after which concerns about a soft landing or a recession may take center stage. At the moment, markets are pricing in about 50 basis points hikes or more from the Fed in the remainder of the year, and we have seen noise saying that 75 basis points is on the table for next month. So that is going to act like gravity on stocks, and stocks are going to, I think, face further downside from here. And I do think that yields have to climb higher as well, particularly at the front end.
Yields have to climb higher at the front end. We saw, of course, when it comes to stocks, and you expect those to fall further, losses about 5.8% on the S&P 500 last week, posting its 10th loss in 11 weeks. Is it all contingent on the turn in the Fed? If you look out to 2023, expectations of recession, BlackRock saying you need to see a pause from the Fed before you get more optimistic on equities.
Absolutely, I buy that view because as long as the Fed keeps going, the discount rate applicable to stocks will push higher and higher. That will bring the valuations down on the S&P, and I do see that the S&P and the NASDAQ are likely to face that pressure, albeit in the next coming 2 weeks, because of we go into the quarter end, they may be rebalancing flows. That may support equities in the short term, but that's pretty much only a short-term scenario. In the longer run, I don't see how equities can come out ahead in the situation where we are in, where inflation is a big concern and the Fed going all out to quell inflation.
Okay, Bloomberg's Ben Ram from our MLive team. You can look at all his analysis, of course, on the MLive terminal, on the terminal and on the blog, of course. Thank you for that take on what is happening around this readjustment to, of course, recession risks and higher inflation. Let's focus now on the airlines industry, which is contending with both those issues as well. With the IATA annual general meeting this week in Doha, Bloomberg TV's Guy Johnson is there with a very special guest for us. Guy.
Morning, Mr. McKenzie. Thank you very much indeed. Yeah, we're here with Guillaume Faury. He is, of course, the CEO of Airbus. Good morning.
Good morning, Guy.
So I'm talking to a lot of airline CEOs here. They're all, as they always are, incredibly optimistic. I think it's the nature of an airline CEO to be optimistic. They see the demand that we're seeing right now, this huge post-pandemic push in demand, being sustained. Do you?
Well, they have a better indication because they are the ones taking the bookings with the passengers. At the moment, the demand is very strong. We knew there would be a pent-up demand at a point in time going into the bookings and the tickets. That's the case now. I tend to believe it's going to be sustainable. As sustainable as it is today, as strong as it is today, I don't know. But there is a very, very deep need for flying, for traveling, that has been contained for 2 years, and I think that's what we see now. And it's rather likely that if the conditions are not changing too much in the world, if it's possible to travel, if there is some certainty in the ability to travel, it will remain very strong.
I think all recent experience suggests that conditions very rarely stay stable for long. I'd be fascinated to get your take on what's happening with the macro picture. Every economist I talk to now tells me there's a recession coming. Is that something you're thinking about?
Well, there are many moving parts at the moment. The situation is not the same in the different regions of the world.
Sure.
And we see the situation of China, US, Europe, with the war in Ukraine. So it's a complex picture, and I think it's very difficult to really know what's going to happen. But there are a lot of signals that tell us it's not going to be easy. Inflation is going up, price of energy will remain very high. It doesn't mean that for our industry it's going to be recession. Because there are many drivers per sector, and in the aviation industry today, after 2 years of lost freedom, the need to fly is very strong. We see a need for replacement of plane that has never been as strong as today because of the price of energy. So some factors play in different directions. We try to get some visibility on our own industry, on our own sector, and on the short term we see a very strong demand growth, and that's what we're trying to respond to.
How much visibility do you actually have?
We have a very deep backlog when it comes to the single aisle, and we have an incredible demand. We are unable to serve the demand. That's the case on the single aisle. We are not in that situation on the wide bodies. International flights are not yet back to a decent level, but it's improving. And I think we'll see in the second half of the decade on the wide bodies, probably what we're seeing now on the single aisle, which means more demand than supply. A lot of planes have been retired, have been mothballed, have been stored with long-term storage conditions. They will not be back to service. and the need for modern planes able to fly with sustainable aviation fuels, reduce fuel consumption, less CO2 emissions. That's very strong. That's the theme of the convention here in Doha.
You talk about your inability to satisfy all the demand in the narrow-body segments. This used to be an incredibly competitive duopoly. Is it still an incredibly competitive duopoly?
Still a very competitive duopoly.
Okay.
The other guy is a very strong company. They have had their difficulties recently, but we don't underestimate their power, and we see that they are very strong on the marketplace. So it is a duopoly, and I think it will remain a duopoly, a strong and competitive duopoly for quite a while.
Let's talk about what you're doing in narrow body. So you're ramping up production. We're going all the way to 75 a month by 2025. That's a big ask for the supply chain. It's a big commitment on the demand side. There's a lot of moving parts in that. Guillaume, how much flexibility do you have? If the supply chain doesn't hold up, if demand wanes a little bit, can you speed it up, slow it down? How much flexibility do you have within that ramping process?
So when we look at the supply versus demand on the single aisle, on the one we're ramping up now, under most of the scenarios, demand will remain higher, stronger than supply.
Yep.
So it's a supply constrained environment for us on the single aisle. Well, we're ramping up back to rate 65 that we had just before COVID. So the production system is existing, but this has been idle for 2 years. So it's very difficult to get there, especially with the global situation on the marketplace. Yep. The supply chains are really disrupted. It's very difficult to ramp up at the pace we have defined to ourselves. In 2022, we want to ramp up by 20%.
Yep.
Okay? Then we'll go to rate 75. So I think demand will remain higher than supply. So it's a race on supply. We've defined a trajectory, and we're working very hard to stick to that trajectory. If at a point in time we have to slow down, we'll face the reality, but we are not there. At the moment, we stick to our plans.
Where are the biggest concerns? So we're hearing that, for instance, you're currently experiencing issues with engine manufacturers. There is a suggestion that maybe aircraft are being built without engines being available. A, is that the case? And B, is that where the biggest problem is going to lie? The joke in the industry is sometimes, and I'm sure you don't share this joke, that you bolt an aeroplane onto an engine, not the other way around. I'm sure you do. But is that where the real kind of concern is going to lie? Is that marrying of engines and airframes?
Well, it's a consequence of other reasons. Engine makers are facing the same problems than we are facing.
Yep.
And actually, these are difficulties across the board. It's not the situation that we have one commodity that is a problem or one region. We see across the globe the same problems on supply of microelectronic chips, small components, wires, connectors. We see shops that were closed for 1 year and a half having difficulties to ramp up because you don't find the people, the skills in number and in skills, and that's across the board. So everybody, all OEMs have a lot of difficulties to get their suppliers deliver on time, and it's a very complex supply chain. That's what we see for engine makers. That's also what we see for Airbus. Now, it's the fact that we're missing engines, and that's at the moment one of the big bottlenecks. And yes, indeed, we are starting to build what we call gliders in 2018, meaning planes without engines. That's a situation I don't like.
Yep.
Engine makers are telling us they will recover in the second half of the year. That's why we take the risk to build planes without engines in limited numbers, with the perspective to get engines at a later stage and being able to serve our customers. Because again, the demand is very strong.
A couple of kind of related but unrelated questions. I couldn't help see you sitting next to Mr. Al-Bakr at dinner last night. You've obviously had your issues with Qatar recently. Any sign of détente?
It's a complex matter. I don't like to be in that situation with one of my main customers. So we're working hard to try to resolve, but it's not an easy situation to manage. So I want to remain optimistic and think we'll find a way forward. And as you've seen, indeed, the relationship is good between the persons. So the organizations need to find a solution.
You are a CEO that has manufacturing bases across many jurisdictions, most of them in Europe. The politics of Europe seems to be getting more and more complicated. It just got more complicated overnight with the parliamentary elections in France that we've seen the results for. It looks like Mr. Macron is not going to have a majority. Does that make your life more complicated? How are you thinking about the politics of France right now and the politics of Europe?
Well, I won't comment too much on France because, as we just discussed before this interview, I have not had time to look at the detailed results and I don't yet understand fully what the consequences will be. But yes, the landscape in Europe is very complex. Europe is complex per se, but we see complex situation in countries, in major countries of Europe. That doesn't make our life easier because we need clarity, we need certainty, we need a business-friendly environment, especially given the very complex supply chain issues, business issues that we have at the moment. So we need clarity of directions, we need certainty, and that's much easier when there is governments in power that are able to drive things.
Yeah. Guillaume, it's always great to see you. Thank you very much indeed for sharing some of your precious time with us this morning. We know you've got plenty of people to talk to here at IATA, so many customers. Thank you very much indeed. Guillaume Faury, CEO of Airbus.
Guy Johnson, excellent stuff. Thank you very much indeed on the ground at IATA on the questions of navigating those supply chains and that incredible demand still for aircraft. Okay, coming up, markets are on edge as investors price in aggressive monetary tightening and a possible economic slowdown. We dive into the details with Maria Weitmeyer, Senior Multi-Asset Strategist at State Street Global Markets. Does she remain bullish on these markets? That is next. This is Bloomberg.
When you think space, you probably think one space agency that travels under the radar is ESA, which is surprising considering what the European Space Agency has achieved and how vital it is to the global space industry.
We've collaborated with pretty much everybody who is involved in space exploration.
ESA wants to be a leading force in furthering humanity's mission into space.
Commander Ground, do you copy? Copy.
If we want to have successful human missions to Mars, we are going to have to learn to live and work off-world in a different way. The place where we are going to learn to do that is on the moon.
Can ESA help humanity take its next giant leap?
Happening on Wall Street.
It's the basic law of economics.
It validated what the market was already pricing.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management.
It's a challenging dynamic.
We could continue to see that kind of strength.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
Welcome back to the Open. We are 17 minutes into your European trading day. You're seeing now losses of around 0.2%. So pairing the earlier gains that we had at the outset of this Monday session. It is, of course, a bank holiday in the United States. The futures there pointing to gains of 0.2%. We have the politics of France front and centre as well after Macron lost his parliamentary majority. What does that mean for his reform agenda? We'll break that down for you as well later in the show. For the context around these markets, you saw the S&P 500 500 losing 5.8% last week, closing down 5.8% on the week. That is the biggest drop that it's seen on a weekly basis since around March of 2020. You'll remember what's happening then. Commodities also taking a hit, by the way, a significant hit last week. We'll continue to check in, of course, on oil and gas, given the restructuring of the gas and energy markets here in Europe. Fascinating to see the Germans refiring or planning to restart coal production and power plants to try and adjust to less gas. Okay, we'll check in on some of the stocks, individual stocks that are on the move as well, close to 20 minutes into the European trading day. We'll start with football, and you have Olympique Lyonnais. There is a bid for this group. It's the owner of that top-flight French team, Lyon. And we have a bid from John Textor. He's a US digital entrepreneur. We are hearing from our own reporting, Bloomberg's own reporting, he's offering €3 per share for a key stake in the group that owns Lyon. It would value the club at about 800 million euros. Euro money getting a big boost there, up 26% on the back of news that there's been a bid from Astorg Asset Management and Epiris. This would be a cash offer, valuing it, or at least shares, individual shares, at £14.61 per share. So that's a 33.5% premium on the Friday close. Not quite reaching that premium, but nonetheless, a big leg up there for Euro money, 26% gains. In the banking space, news that Handelsbanken is agreeing to sell its Danish business to Jysec, which is a Danish bank, for what we're seeing is a cash deal plus a 3 billion Danish kroner payment in terms of a goodwill payment. You're seeing Handelsbanken gaining 1% on the back of that. So some corporate movers that we are bringing to your attention. Let's get back to the broader picture then, the macro, as we readjust then to concerns about inflation and higher rates. Let's bring in Maria Weitmeier, Senior Multi-Asset Strategist at State Street Global Markets. Maria, you have early in this year been constructive on this markets. Where are you now in thinking about market trajectory? Are we seeing a capitulation at this point?
Yeah, good morning, Tom. Good morning, everyone. Yeah, I think you're absolutely right. It's very, very difficult to construct a positive case for risk assets, for equities. We know that inflation is high, inflation is rising, and central banks are doing whatever it takes to fight it. So that's a very, very difficult backdrop.
What would you need to see, Maria, to get back to that more constructive view?
Yeah, I mean, it is very interesting because what we're still seeing is that underlying strength, underlying kind of robustness in consumer, underlying robustness in corporates. And let me clarify it, it's on aggregate level. So we still see consumer having savings, we still see consumer having cash on the balance sheet. It's just very, very unequally distributed. So lower income consumer, lower quality corporates are really struggling. However, overall, we're seeing a lot of money, in the system, which means that that money can be spent, and that's potentially what kind of pumping up inflation. So I think we need to see those savings kind of being spent and or saved, or just not coming into the system. That will see inflation slowing, that will see overall economy slowing, and that will allow central banks to be less aggressive. And that would be a moment to get back into stocks.
Okay, and where are you seeing, in terms of the de-risking in the equity space, some attraction there? What is de-risked enough for you to want to get in?
I'm going to try my favorite sector. So tech looks, so there is a portion of technology sector which is a very, very large cap, very, very strong balance sheet. And there are some stocks that really, really suffered a lot. They've been, multiples have compressed as they have long duration, but then underlying fundamentals in like a segment of like much more like large cap and cash rich companies is still there. So I suspect if we are going to see, if we're going to kind of economic slowdown, a central bank pushing us there, that probably would be an area to hide. So highly profitable, very large companies, which easy access to financing. Lots of them are found in tech sector, which is massively, massively derated.
Okay, that is counter consensus at this point, largely, the move into, or at least the call to get into some exposure to tech, mega cap tech maybe on the back of those balance sheets. Make the case very briefly, Maria, for energy as we head into a potential recession. Historically, energy does not do well as a sector in a recession.
So energy, I mean, obviously your inflation hedge, and I mean, in your previous segment, you were talking about kind of demand-supply imbalances, and I mean, the fact that Germany has to fire up coal plant, which basically means that we don't have enough kind of alternative sources of energy. So that's a problem. We've seen a decade of kind of underinvestment in, particularly in the energy sector, which means that yes, absolutely, we want to get to more efficient, more environment-friendly technologies and to kind of generate electricity, but we're still not there. So supply is very difficult to come by. Yes, demand conditions are slowing, but supply is not there, and that's a problem. So that means that kind of underlying pressure is there. And if I look at valuation of energy companies as well, I mean, they have come up a lot. I mean, obviously, that's been a trade-off like last year, but it still pales in comparison to levels of stocks traded in terms of multiples for like a decade ago when energy prices were, oil prices were at similar levels. So there's still potentially, yes, they're expensive, but they can get a lot more expensive.
Maria Weitminer, we always appreciate your insights. Thank you for joining us this Monday morning. Senior multi-asset strategist at State Street Global Markets, joining us out of Milan. This is Bloomberg.
Front Row, exclusive interviews with the most influential figures in finance. Lloyd Blankfein.
Deflation is a terrible thing. Inflation you could tolerate.
Kathy Wood.
Tesla will be in the pole position to dominate.
Jeremy Grantham.
We've had a very, very abnormal honeymoon Goldilocks period.
First available on the Bloomberg Terminal, then on Bloomberg Television and Bloomberg.com. Front Row, the best seats in the house for business's greatest minds. Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question. It's a great question.
Great question.
Great question.
Great question. Great question.
That's going to be the best question I get all night.
I'm glad you asked that.
Bloomberg Television. Top experts. Great questions.
Welcome back to the Open. 26 minutes into your European trading day, range-bound across the benchmark European stocks in 600, bringing your attention to what's happening in the CAC 40, just lower by 0.1% on the back of the news that President Emmanuel Macron has lost his supermajority in Parliament, what that means for his reform agenda. We'll break that story out for you, get more details shortly. Stay with us. This is Bloomberg.
nuestro estudio, en nuestro experimento, no hemos pintado todos los edificios de blanco, sino estos más asequibles de pintar. Y ya hemos detectado reducciones medias en el área metropolitana de 0,8 grados aproximadamente en un periodo de ola de calor y con picos máximos de 4 grados de disminución en un momento puntual del día, en una zona puntual del día. Y como dices, en una ciudad como Barcelona funciona incluso mejor que las zonas verdes, según las modificaciones nos detectan incrementos, o sea, disminuciones de temperaturas mayores con tejados blancos que con incrementos de zonas verdes como tienen planteados el plan director urbanístico.
Hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
Welcome back to the Open. We are 30 minutes into your European trading day, and here are your top stories. All in, the Fed's Christopher Waller says he would support another 75 basis point hike, saying the US central bank will do what it can to re-establish price stability. Crypto on edge, Bitcoin struggles to hang on to the $20,000 handle, continuing its recent freefall amid current volatility. And in France, Emmanuel Macron loses his absolute majority in Parliament after an unexpected surge in support for the far right. Let's check in on these markets then. Politics are back as a question for investors, and we'll unpack some analysis shortly, of course, what it means for the reform agenda of Emmanuel Macron. But it is the recession fears more broadly, and of course the question marks about when we start, if we start to see inflation peaking, which of course remains front and center for many investors out there. Loretta Mester then saying that, yes, there is now a higher risk of a recession in the United States, and it will take a number of years to get back to the Fed's 2% target. Meanwhile, Christopher Waller saying 75 basis points for him in July is almost a given if the data comes in as he expects. Let's check in on the markets. These are the sectors. More broadly, what you've got is a range-bound picture across the European stocks at 600, a bit of lack of direction amid all of these concerns. Iron ore is one commodity that's in focus for us. That's falling heavily today on concerns about demand. On a sector-by-sector basis then, and this is looking over a longer period of time, but you've got the sectors at the bottom of the list. You've got construction down 2%. We'll try and get the right boards for you, but what we're looking at then is a real lack of conviction. The broader picture for the S&P 500, of course, is that last week it did fall into bear market territory, falling 5.8% for the week. Year to date, the S&P 500 down about 22%. The European stock 600 down around 17% year to date. Let's get back to what's happening in France then, the politics and the implications for the president, Emmanuel Macron, who has lost, his centrist alliance has lost its outright majority in the French parliament. Macron's group won 245 seats, short of the 289 needed for an absolute majority. A left-wing alliance will be the second biggest bloc, with the far-right National Rally in third, claiming 89 seats. That was a big surprise. The result means Macron will struggle to pass legislation, putting much of his economic agenda in peril. Let's bring in Sciences Po politics professor, then Annabelle Lever, from an analysis on this and reaction. Annabelle, good morning. Bonjour from London. What is your take, your first take on the results of these parliamentary elections and what it means then for the president?
Good morning. Well, I guess the big news really is the 89 for Le Pen and the far right. That wasn't anticipated by anyone, and it really does make a huge difference. Les Républicains now in fourth place. And when you think about it, I think the most dramatic thing is that everyone else is a coalition party. Macron's party Ensemble, it's a coalition. NUPES are a coalition. The one party, other than the Républicains, who are very small, that isn't a coalition is Le Pen. And so I imagine that her power is, in a way, going to be disproportionate to the number of seats she has because her group are going to be united. The others may or may not be.
Well, we certainly want to get your views on the power then of Le Pen on the back of this result. But I first want to get your take on whether or not you think at this point it's likely that the president, that Emmanuel Macron, can hold on to the executive branch and how he would do that.
I don't know. I mean, I don't think he's going to want to call another election anytime soon after what's just happened. I imagine he's going to try and make the best of it, see if the room for compromise with the other parties. I mean, that's certainly what he said this morning. And there certainly is room for compromise. I mean, after all, everyone knows the environment's a critical issue, the recession or the threat of a recession is a critical issue, international politics are critical, so there's plenty of room on which everyone could agree if they wanted to. The question really is whether or not they're going to be able to do that.
So it seems like your take is that it's not necessarily fatal for the broader reform agenda of Macron, but it comes down to whether or not they can actually make some deals behind the scenes.
Yes, well, I mean, I think there's some things that are going to be out. I mean, the change to pensions, a dramatic change to pensions is clearly not on the cards anymore. But beyond that, I'd have thought there was a lot of room for agreement, particularly over perhaps more participatory democracy. That seems to be one point that unites all the parties and that, after all, is really urgently needed at the moment. You've got an abstention rate of 54%. So anything that helps to engage people in politics has to be good for all the parties. And I take it that some changes there would be possible. And in other respects, yeah, I mean, it looks as though there's quite a lot of room in which they might be able to agree.
Do tax reforms fall into that,
if I might,
basket of areas that could be tackled?
Well, one thing I think that's clearly urgent is to improve services in the hospitals and in public schools. Like a lot of countries, COVID has really wrecked public services, and there really is, even before COVID, there was a shortage of medical personnel in the countryside in what were called medical deserts. And I know that that's a big issue for almost all of the parties. So that would be one thing that would really help both to sort of increase confidence in the economy, increase confidence in the parties and the coalitions, and that ought to be feasible for them to agree on.
Okay, so those are some areas that they could work on.
And then, of course, they can try and improve the minimum wage.
Professor, what about tax reforms? Are they out with the retirement age, or is that an area that they could work on together, some of these parties?
Yeah, no, I think the retirement age is definitely not going to be 65 in this parliament. I don't know exactly whether they can change, perhaps, on the point system without changing the age. I mean, originally Macron's idea had been to simplify the pension system. They have something like 44 different pension plans created by the national government. And the idea had been to simplify it down to one. Well, one may be too simple. Maybe they could go down to 5, 10, and not increase the age. The original plan hadn't been to increase the age of retirement. It had simply been to simplify the pension system. So perhaps that would be a possible change if it really was attractive for them all.
Okay, Professor, before we let you go, is the France of today, is the France of this Monday morning less investor-friendly than the France of Friday?
I don't know how you felt on Friday. It depends how sort of risk-averse you are. I don't see why. I mean, France is a very strong economy. People are very talented. They're well-educated. It's a stable country. By and large, it's well-governed. I wouldn't have thought it was any less investor-friendly now than it was before. It was already, I think, on Friday, it was pretty obvious. He wouldn't. Okay, bye.
Okay, thank you, Professor Annabelle Lever, Sciences Po politics professor, working through some of the implications then of Emmanuel Macron losing his supermajority. There are areas, according to Professor Lever, of compromise then, as Macron wakes up to, of course, a weaker hand when it comes to the politics of his own country. Right, coming up, Germany steps up efforts to bolster gas storage levels as Russia squeezes flows into Europe. More on that story next. This is Bloomberg.
has stories about what they call black soot, caused by the manufacturing and consumption of these fuel products in the illegal refineries.
Oil theft, known as bunkering, and the refining of its spoils is worsening the damage from decades of fossil fuel exploitation, creating one of the world's most severe ecological disasters.
Our sacred forests, our homes, have to give way to oil wells, and no one gets much benefit.
Imagine a resident of Port Harcourt who inhales this soot every second in 24 hours, 7 days a week, 30 days in the month, and for years now, we are dying slowly but surely, and our lifespan is reducing every day.
When does cable go up?
It will at some point.
I don't think there's probably a great deal of enthusiasm in the markets for UK assets.
We've got the biggest tax grab in almost 70 years from the Johnson government. That's having a depressing effect on the economy.
Lower interest rates.
The mix between inflation and growth, the trade-off that they face, is worse than elsewhere.
So I think, there is scope for it to be to a degree weaker.
I would throw in two candidates.
We need the dollar to turn around. And
an environment where value assets will strongly perform. I think that would be an opening for sterling. But right now, we don't expect either one.
Not this year.
Some people talking about parity, and that's probably a little extreme.
Okay, some top investors there speaking to Bloomberg on the outlook for the UK economy. Strategists and economists also in the mix, we should say, within that sound that we were hearing on UK assets. Just checking in now on sterling. You're currently seeing the pound trading at 122. Not a lot of movement for the pound today. And in terms of gilts, 2.5% on UK 10-year, just to move off about 2 basis points in the session today for the 10-year here in the UK. But that reaction then to the MLive Pulse survey of the week around the trajectory for UK assets. We have the CPI print as well, inflation on Wednesday, and there is that expectation you could get double-digit inflation here in the UK just in the next few months. We're watching to see if that comes through, in fact, as soon as Wednesday. Right, let's get the Bloomberg First Word News now with Laura Wright. Laura.
Good morning, Tom. President Volodymyr Zelensky says Ukraine is facing a historic week as EU member states are being asked to sign off on its bid for candidacy status to join the bloc. Meanwhile, as grain harvests get underway, the war-torn nation is warning output may shrink by more than 40% this year because of Russia's invasion. The UK is bracing for a week of travel disruption after efforts to avert a planned rail strike failed. Trains will be disrupted in 3 days of walkouts starting tomorrow as 40,000 staff hold the country's largest train strike in more than 30 years. Separately, Londoners will be hit by a walkout on the city's underground network in another Labour dispute. China is sending teams to central and eastern parts of the country as soaring heat and a lack of rainfall threaten to hamper summer planting of corn and soybeans. Temperatures as high as 40 degrees Celsius in Henan, Hebei and Shandong provinces are drying up soil, making sowing difficult. This comes after many Chinese farmers reaped a bumper harvest of winter wheat. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg. Tom.
Laura, here in London. Thank you very much indeed. OK, Germany is to step up efforts to bolster gas storage levels as Russia squeezes flows into Europe. The country's economy minister, Robert Habeck, says there are also plans to fire up more coal plants to conserve natural gas. Joining us now is Will Kennedy, Bloomberg's executive editor for energy and commodities. Will, let's start with the question of Russian gas and where we are in terms of the flow restrictions that we saw last week. Do we expect any further moves? How much is now flowing into Europe versus the week before?
Yeah, flows remain constrained. We have these so-called technical issues on the Nord Stream 1 pipeline, and Germany's biggest buyer of gas last week, Uniper, reported that it was only getting 60%, which is a very challenging situation for Germany to be in, obviously in the summer months when gas demand is low, but what it means is hopes of filling up Europe's gas storage sites to a level before the winter when gas demand surges, it's not going to be as easy or as likely as people thought, and that's a severe challenge for Europe's economy.
And the linkages then from coal, and that, or indeed from gas to coal, and the remarkable prospect that we're seeing now of a member of the Green Party, the foreign minister, saying we are going to have to restart coal-fired power stations in Germany.
Absolutely, and it just shows that energy security is paramount before anything else. It's an astonishing situation for Robert Habeck, who, as you say, is a leader of Germany's Green Party, who's been campaigning against coal power his entire political lifetime, to have to do this. And he said it himself. He said it was an extremely bitter moment. But Germany, which has relied more on coal than any other country and has been transitioning away from it by using more natural gas, has very little choice without risking real disruption to its power supplies this winter. So it has a reserve of coal power plants that it was looking to phase out, and it's going to slow that down and bring some of those back into use over this winter. But it's worth saying that it's not just Germany. The UK as well, a country that had gone much further than Germany in phasing out coal, and in fact plans to entirely phase out coal in the next 2 years, is planning to keep 3 plants on this winter because it's facing similar pressures.
$120 a barrel on Brent in the middle of last week, and then it dropped quite significantly on Friday, about a 7% drop. Now trading around $112, just down 0.2% in the session today. What was the reason for that drop, that significant drop we saw on Friday, and what is the outlook going forward?
Well, I think it was partly driven by market structural factors in the market. Liquidity in the oil futures market has been very low at times this year. There are many market participants who have seen the volatility this year and reluctant to take part, and that can exaggerate moves. But I think, like other assets, it was reacting to the more aggressive stance of the Fed last week and what that means for the outlook for the global economy, the possibility of recession. And as we got to the week, traders repositioned themselves, and combined with low liquidity, we did see that move. But I think it's worth pointing out that when you look at global physical oil markets, when you look at global fuel markets, things remain very tight. We've got far lower production in Libya, for example, which is putting a lot of pressure on physical markets just to get the barrels into refineries in Europe. And we have this, as we go through the summer and people are flying more, driving more, the global refining market is extremely tight and refineries are working at full capacity. So I don't think it should be taken as a signal that we're past the worst in the oil market. I think that remains to be seen.
Okay, so that respite may be short-lived. Will Kennedy, as ever, thank you for breaking down what's happening across the energy space here. Coming up, a weekend of volatility as well, not just in energy, but also in cryptocurrencies, of course, leaving Bitcoin hovering around the closely watched $20,000 level. We're back in the crypto space with more details next. This is Bloomberg.
energy prices and a short supply of key chemicals that produce synthetic fertilisers are sending pig, cow and horse manure prices soaring. Even human waste is in demand as farmers hunt for alternatives. Fertiliser helps increase crop yields.
You can see how much moisture is held into this. It's a lot of organic material into the compost, so it breaks down. The manure and the straw breaks down into a friable mix that can be mixed into your soil in the ground and for growing a whole range of different vegetables. Holds the nutrients in, holds the water in, and it really increases the kind of biodynamic profile of the soil.
The recent price spike could mean more farmers going organic for the long term.
Crypto, you have a world of young people that want their own financial system and their own culture. And it is very powerful, and I'm a big believer in it.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed. Welcome back to the Open this Monday morning, 50 minutes into your European trading day. A lack of direction, a lack of catalysts for these markets amid all these concerns about recession and inflation. Range bound, no movement at all across the benchmark European Stock 600. As I said, 50 minutes into your trading session. The futures in the US, it's a national day. It is Juneteenth in the United States, but the futures are pointing to gains of 0.5% after some heavy bloodletting across the S&P 500, broadly across the US markets, of course, last week. Talking of bloodletting, let's get to what's happening in the crypto space. Bitcoin snapping a record-breaking 12-day slide yesterday, clawing its way back from around $17,500, remember December of 2020, to above 20,000. However, many analysts are cautioning the respite may be brief. Speaking on Bloomberg on Friday, MicroStrategy Chief Executive Michael Saylor said he still thinks Bitcoin is a bet that's 10 times better than anything else.
We did a lot of back testing, and I've gone back and I've looked at the numbers. And on August 10th of 2020, when we announced our $250 million Bitcoin buy, since then, Bitcoin's up 72%. The money supply is up 17%. The Nasdaq's down 2%. Gold's down 9%. The S&P is up 9%. And the only thing that looks better than the money supply expansion is single-family homes up 26%. I couldn't have bought billions of dollars of single-family homes, and so that's not even practical. So the bottom line is the Bitcoin strategy is 10x better than any other alternative. And so no, I don't regret it. We've got $2.8 billion worth of Bitcoin on our balance sheet right now, and we feel like we're positioned well for when the markets turn around. And our only other choice would be to give all the capital back to the shareholders, in which case we would have nothing, and we would be struggling to get by without any assets.
Okay, how about this? Is cash still trash?
Yeah, I mean, the money supply has expanded by 41% since January 1st of 2020, when we went into this kind of COVID crisis. And we know that scarce, desirable assets are getting bid up in price. I mean, everybody wants to buy Rolex watches. They're buying luxury real estate. They're buying everything they get their hands on, creating shortages. So, you know, we are an institution. We have to take a 10-year view. And the only thing that's for sure is if we hold cash over a decade, we're going to have a negative real yield. The only question is how much. So we have to invest in something. And we've chosen as a business strategy to focus on what we believe is the most exciting investment idea, because it's a digital commodity that's absolutely scarce and only getting technically better every year.
So are you considering buying more Bitcoin at these prices? I mean, is Bitcoin on sale?
Yeah, I think it is on sale. You know, the number that I look at to figure out sort of a surrogate for the book value of Bitcoin is the 4-year simple moving average, because it trades billions of dollars a day. And so after 1,400 days of billions of dollars a day, that number is 21,700. Bitcoin touched that in the March 2020 crisis. It touched it around 2017. It's touching it right now. Generally, it trades above there. You know, our strategy is we're going to acquire Bitcoin with our free cash flows from time to time. So we're kind of dollar cost averaging into Bitcoin, and we're going to hold the Bitcoin for the long term. And so it wouldn't really matter whether the price was 10% more or 20% more or 50% more. We're just going to progressively acquire more Bitcoin.
Okay, MicroStrategy Chief Executive Michael Saylor there, giving the bull case for Bitcoin and speaking to Bloomberg's Emily Chang on Friday. For more on the crypto space, we're joined by Bloomberg's crypto reporter, Emily Nicole. Currently, Bitcoin trading at 19,938, so back below that 20,000 level. Emily, what is going on then with crypto markets this morning?
So this morning, we're seeing a bit of a rebound for Bitcoin, but it's still hanging out below that $20,000 mark. It really has been a volatile few days for the cryptocurrency. Other tokens are similarly affected as well. Pretty much everything is a sea of red as usual in crypto for the moment anyway. And that's mainly due to not just the traditional market indicators like the Federal Reserve interest rate hikes last week, but also a crisis going on in DeFi with liquidated positions really harming investor confidence.
Okay, Emily, just unpack some of that for us then. The things, the factors that are powering some of these moves now to the downside within the crypto space that we've seen over the last few days.
Yeah, so if we cycle back a little bit, we have some major lenders and hedge funds starting to experience a bit of a liquidity crunch there. They're all facing issues and having to suspend customer withdrawals or even just warn clients that their cash isn't as safe as they thought it was. And then over the weekend, we're seeing some of the knock-on effect on some of the major blockchains happening as well. So there is a lender that is focused on the Solana blockchain called Solend, and it had one very large address known as a crypto whale in the space that was a threat of liquidation, didn't seem to be doing anything. The users of that blockchain voted to take over that wallet temporarily so that it could prevent the liquidation from happening automatically, as it always does in crypto. And they're now reversing that process to walk it back and give control back to that owner. But that was certainly an unprecedented move for the space. We've not seen that happen before.
Okay, Emily Nicole of Bloomberg, of course, across all these moves in crypto. Currently, just giving you a quick check on what's happening with Bitcoin, trading at, what, 19,960, I should say, down around 3% in the session. Ethereum trading at $1,000, down close to 5%. Checking on your broader markets, European stock 600 now back in the green, I should say, up 0.2%. I'll get there in the end. The futures in the US, the ESA, the E-minis, pointed gains of 0.5%. It is a national holiday in the United States. We continue to watch the fallout of the politics of France, but the CAC currently up 0.1%. And here in the UK, gains of 0.3%. Recession fears, inflation still a factor, and the politics of France. That is it for the European market open. Surveillance early edition is up next. Stay with us. This is Bloomberg.
Companies now, they're getting hundreds, maybe even thousands of applications. So software has come in to automate the process.
You want to write your resume for robots, not for humans. The only job your resume has is to be comprehensible, to the software that is reading it, because that software or robot is going to decide whether or not a human ever gets their eyes on it.
These things are programmed by a certain segment of the population that might not be totally inclusive or not be fully aware.
Concerns about how this technology could exacerbate discrimination. For the FTC, I think foremost, the FTC needs to be making sure that we're fully understanding this technology.
We don't trust companies to self-regulate when it comes to pollution. We don't trust them to self-regulate when it comes to workplace comp. Why on earth would we trust them to self-regulate AI?
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
I still think that the Fed and most market participants are underestimating the gravity of our situation.
The bottom line is the Bitcoin strategy is 10x better than any other alternative. And so no, I don't regret it.
I'm not going to, ignore the fact that we're facing some challenges, but actually the outlook remains very, very positive.
I'm using every lever available to me to bring down prices for the American people.
This is Bloomberg Surveillance, Early Edition with Francine Lacqua.
Well, good morning, everyone, and welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in Doha for the Qatar Economic Forum, and here's what's coming up on today's program. All in, the Fed's Christopher Whaler says he would support another 75 basis point hike, saying the U.S. Central Bank will do what it can to reestablish price stability. Crypto on edge. Bitcoin struggles to hang on to the $20,000 handle, continuing its recent free fall amid current volatility. And in France, Emmanuel Macron loses his absolute majority in parliament after an unexpected surge in support for the far right. So I'm in Doha for day one of the Qatar Economic Forum. Plenty of interviews coming from the conference in the next couple of days, including Standard Chartered's Bill Winters, VW's Herbert Diess, and Boeing's David Calhoun. Now, plus on Tuesday, we'll also be speaking to the Tesla chief executive, Elon Musk, so you don't want to miss that conversation. Now, last week was a big one for markets as we saw further tightening of monetary conditions. Here's what central banks and politicians had to say about the inflation problem.
In the sense of the outcome of our forecast, yes, we've underestimated inflation.
The recession risks are going up.
We've had high inflation in the first half of this year, and that locks in high inflation really for the entire year.
My colleagues and I are acutely focused on returning inflation to our 2% objective.
I'm using every lever available to me to bring down prices.
The Fed is all in on reestablishing price stability.
And our nations are working together to stabilize global energy markets.
If we do see greater evidence that the current high level of inflation is becoming embedded in pricing behavior by firms, in wage setting behavior by firms and workers, then that will be the trigger.
I still think that the Fed and most market participants are underestimating the gravity of our situation.
Well, joining us now is Catherine Young, Investment Director at Fidelity International. Catherine, thank you so much for joining us. Last week, we were worrying about monetary policy and inflation. This week, we're worrying about monetary policy, inflation, and China. How big of a concern is China right now?
China has been a concern for global investors year to date because of the slowing economic growth we have seen out of the country, which really began last year. But year to date, really, the lockdowns that we've seen in various cities and provinces in China have caused some concern for investors because you've basically seen a lack of movement, so impacting consumer sentiment, potentially seeing disruptions to the supply side. But worth highlighting that China is in a very different position versus the rest of the world, especially when we look at policies, whether it's the COVID policy or indeed monetary and fiscal policy. So China's in a position where they can ease, they are tweaking. The market was expecting more or hoping for more, but they haven't. So it puts them in a different scenario. Also inflation, it's relatively benign in China versus what we're seeing around the world.
So, Catherine, overall, what does it mean for where you want to be invested in? If you look at some of the dislocations that we saw last week, is it symptomatic of something still worse to come?
Well, if we look at China in particular at this point in time, the market, the economy, they're probably one cycle ahead at this point. So technically the business cycle is probably in its low. So seeing earnings probably bottom in the second quarter. Not saying there's going to be a V-shaped recovery. In fact, it's probably more likely to be a gradual recovery. But again, because of that policy bias, i.e. the ability to add some form of stimulus, both monetary and fiscally speaking, we do expect to see China, relatively speaking, outperform other markets. In terms of the rest of the markets, though, anecdotally, companies are saying that declining purchasing power, at the same time, higher cost push inflation is causing them to be very cautious, and earnings are likely to continue to be derated going into the second half of the year.
Is there a danger that we actually see an earnings recession, even if the world economy is not hit with a recession, or even if the U.S. doesn't go into recession? And what does that mean for where you want to be invested in stocks?
Yeah, earnings generally across the board, not just China. I mean, earnings visibility is somewhat of a scarcity. So if you have the ability to have those earnings coming through, then likely you'll be rewarded by the market. That coupled with, for example, and again, I'm going to use China in this sort of example, is the yield or the dividend yield and the dividend policy that many companies are paying out. So it can act as a bit of a cushion in this period of volatility. But yes, certainly we do expect this skittishness to continue. And again, across the board, earnings to be derated or be put under pressure.
So are you expecting the dividend yield story to continue staying strong in China? And what does that mean for your investment strategy in the country?
Yeah, I mean, it's something that investors don't really recognize or often highlight. Australia, yes, definitely a market where you do expect to see that income coming through. But the fascinating sort of direction that the Chinese companies are going through, one, it's under their corporate governance code in terms of maintaining a good dividend policy or a standard of dividend policy. But if you think of the rising local investor base, so that need to diversify away from property in terms of the household assets, away from just putting it into a deposit account, you need to see the growth and evolution of the capital markets. And this is why it's not just about potential capital appreciation over 2 weeks. It's about the long-term viability of owning stocks, equities, or fixed income, and hence this yield bit comes into play.
But Catherine, your big bold call is really that Chinese stocks look also more attractive than most parts in the developed markets. Are the risks though increased if they go into protracted lockdown, if they stick with COVID zero policy, and also if there's more regulation coming?
So in terms of the cyclical headwinds, the COVID policy and the zero COVID policy has seen this slowing economic growth. The regulators, the government has come out with a 33-point agenda in terms of areas that they want to add sort of stimulus. And so that's important. Again, from a balance sheet perspective, they do have the tool set. Regulatory-wise, we've probably seen the peak of surprises. And so think of the regulatory period last year, which a lot of that is now priced in, as just continued news flow from those main areas. So common prosperity continues to be a key area regulatory-wise. But again, we don't expect to see any big shocks or big surprises come through from that perspective. So all up from a valuations perspective, a lot of the negative news, especially from last year, is now being priced in.
Catherine, and I know, for example, Bitcoin fell off a cliff over the weekend. I mean, there seems to be very little safe spaces across everything. How do you hedge with gold, or do you hedge with yen or something else? Like, how's the currency space going to look like?
Yeah, the currency is very interesting to watch, and even gold, you would have thought, given the inflationary pressures, that it would have risen a lot more. So again, it goes back to that earnings visibility. And I think, talking about this potential derating that we could see with companies, it's about ensuring that your supply actually equals the demand, the intended demand, not the intended demand of when households had all this free money or that transfer of funds from the national balance sheet to the home. And so once that free money goes away or taken away, inflationary pressures, the health of the labor market, this is what you need to consider as a company to ensure that your strategy remains intact, and hence your earnings can come through. So it's about diversification, but again, having that income cushion, and China, because it's such a diversifier, is still attractive.
Catherine, thank you so much. Catherine Young, their investment director at Fidelity International, joining us, of course, on the big market moves that we saw in the last couple of weeks. And then Bitcoin. I mean, we just showed Bitcoin. It's really pretty incredible. Over a 6 months chart, what Bitcoin has done. Coming up a little bit later in the program, the airline industry, of course, also struggling to cope with the resurgence of demand for travel. We speak to the Air New Zealand chief executive, Greg Foran, live at IATA's AGM here in Doha. This is Bloomberg.
city of Jamnagar is a money-making machine for Asia's richest man, Mukesh Ambani. His company Reliance has the world's biggest oil refinery complex here in the city. Jamnagar is also where Ambani is making his newest bet, a $10 billion investment in green energy. His ambition is closely aligned with the Indian government's plan to reach net zero emissions by 2070. But Ambani is not alone. India's second richest man, Gautam Adani, has committed $20 billion of investment over the next decade. But India's massive dependencies on fossil fuels have some environmental advocates questioning the realism and sincerity of those green ambitions and those of its two biggest billionaires.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in Doha for the Qatar Economic Forum. Now, let's take a look at some of the key events happening this week, and there are a lot of them today. U.S. markets are shut for the Juneteenth National. In Europe, ECB President Christine Lagarde speaks at the European Parliament in Brussels. It comes, of course, days after officials announced a new tool to prevent an excessive divergence in borrowing costs across the Eurozone. Then on Tuesday, it's the start of the Qatar Economic Forum, powered by Bloomberg. Inflation will also be back in focus on Wednesday as we get the latest CPI print for the UK. And then Bloomberg Economics expects price pressures to edge up in May from 9% in April in the US. The Fed Chair Jay Powell kicks off 2 days of testimony on Capitol Hill. On Thursday, EU leaders convene in Brussels for a 2-day meeting. And finally, on Friday, we get more UK data with retail sales, for example, expected to slow down as consumer confidence hits new lows. Now let's get straight to the Bloomberg. First Word News in London is Laura Wright. Hi, Laura.
Hi, Francine. President Emmanuel Macron's centrist alliance has lost its outright majority in the French parliament. Macron's group won 245 seats, short of the 289 needed for an absolute majority. A left-wing alliance will be the second largest bloc, with the far-right National Rally in third, claiming 89 seats. The result means Macron will struggle to pass legislation, putting much of his economic agenda in peril. President Volodymyr Zelensky says Ukraine is facing a historic week as EU member states are asked to sign off on its bid for candidacy status to join the bloc. Meanwhile, as grain harvests get underway, the war-torn nation is warning output may shrink by more than 40% this year because of Russia's invasion. The UK is bracing for a week of travel disruption after efforts to avert a planned rail strike failed. Trains will be disrupted in 3 days of walkouts starting tomorrow as 40,000 staff hold the country's biggest train strike in more than 30 years. Separately, Londoners will be hit by a walkout on the city's underground network in another labour dispute. The German government is to step up efforts to bolster gas storage levels after Russia reduced flows to the country. A state-owned lender will make available additional credit lines available to guarantee gas injections. More coal plants will also be fired up to reduce natural gas use ahead of the winter months. China is sending teams to central and eastern parts of the country as soaring heat and a lack of rainfall threaten to hamper summer planting of corn and soybeans. Temperatures as high as 40 degrees Celsius in Henan, Hebei and the Shandong provinces are drying up soil, making sowing difficult. That comes after many Chinese farmers reaped a bumper harvest of winter wheat. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg Francine.
Laura, thank you so much. Laura Wright in London now. I'm in Doha for day one of the Qatar Economic Forum. Plenty of interviews coming from the conference in the coming days, including Standard Chartered's Bill Winters, VW's Herbert Diess, and Boeing's David Calhoun. Plus, on Tuesday, the big one, we'll be speaking to the Tesla chief executive, Elon Musk, so don't miss that conversation. Now, coming up, the airline industry struggles to cope with the resurgence of demand for travel. We'll be speaking to the Air New Zealand chief executive, Greg Foran, live at IATA's AGM in Doha. That's coming up next, and this is Bloomberg.
Delhi airport, and behind me you can see SpiceJet 737 MAX aircraft. SpiceJet chairman Ajay Singh earlier today said that Boeing is going to compensate SpiceJet in form of cash and aircraft. Celebration happening at the Gwalior airport. As you can see, they've literally rolled down the red carpet for SpiceJet chairman Ajay Singh. There are balloons, there are flowers. This is a big deal for SpiceJet because it is the only Indian operator of Boeing 737 MAX planes currently.
however you get your news.
This is Bloomberg Daybreak with Lee.
On Bloomberg Radio.
Welcome to Daybreak Australia.
This is Bloomberg Technology. This is Bloomberg Green.
On TV, radio, and the web, this is Bloomberg.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in Doha for the Qatar Economic Forum. Now, leaders of the aviation industry also gathering in Doha for the IATA's annual general meeting here in Qatar. Now, it comes as the sector struggles to cope with the resurgence of demand for air travel. Let's get straight to Bloomberg's Guy Johnson, who's at the event. We briefly had dinner, but then he had to go and hang out with the celebrities, and he's joined by a guest. Guy.
Yeah, that's the big story. We'll deal with that a little later, Fran. Let's talk a little bit about what's happening right now in this airline industry. Greg Foran is the CEO of Air New Zealand. He took over during the pandemic. He's had a fairly interesting ride as a result, and we've now got plenty of challenges to deal with. Air New Zealand is coming out of this in fairly good shape in some ways, but you had a fairly difficult lockdown, Greg. You completely shut down New Zealand. You've had domestic shutdowns to factor in as well. Where are you now in terms of bringing this business back? Where are you in the recovery phase?
Yeah, we're moving quickly. So we were a bit slow out of the blocks, but come April the 14th of this year, we were open to Australia. We then had visa waiver countries open on the 1st of May, so just 2 weeks later. Pre-departure tests have now disappeared as of tomorrow. So quite quickly, we're seeing, a rebound in travel. And not just travel for people leaving New Zealand to get out, but increasingly people wanting to come back in. So I'm really excited by the speed of, that we're seeing in terms of the recovery.
It's a beautiful country. I can understand why people want to come and see it. The rugby's pretty good, I hear, as well. Let's talk a little bit about the two sides of that, supply and demand. Let's start off with the demand side. There is clearly, as you say, pent-up demand. People want to travel, people want to get out, people want to get in. How long does that last? How sustainable is that phase, do you think?
I'm not sure. It's a simple answer. And the reason for that is we're dealing with an environment that we certainly haven't seen in New Zealand, and I suspect most haven't. You've got a situation here where people have built up savings, but you're also dealing with inflation rates that we haven't seen. That's driving to higher mortgages. So, at what point does a fare increase start to impact on the degree that people are going to travel?
So how close to that point are we, do you think? Fares have gone up because fuel has gone up. You're also having to deal with staff shortages as well. So you're a bit supply constrained in terms of your ability to bring this capacity back on. How far away is the point where fares actually start to drive demand destruction?
We haven't seen a move yet, and we're seeing fares generally in New Zealand up around about 20-25%. But I'm not sure is the answer to your question, because the environment is so different.
Yep.
So, what we're doing is, if you like, being bold in thought but cautious in deed. Let's just be sensible about how we bring it back. Let's keep a close watch on what's happening and adjust and move just as we've had to over the last 800 days.
Have you got the staff you need?
We are. We're being quite, sensible about how we're bringing people back. We've, got a good brand. A lot of people that we unfortunately had to let go, about 85% of them, very keen to get back. We've brought back almost 2,000 people, so about 20% of our workforce.
It's a long way to go still, though.
Oh, absolutely. And I don't think this happens quickly. So, I'm not deeply versed in all things airline, having not grown up in the industry. But my sense is this is a good 9 to 12 months of building back real robust capability, whether you're talking about airports, whether you're talking about crew, whether you're talking about engineering and maintenance. So there's a degree of patience that's going to be required. And importantly, you just don't want to restart the way that you finished. Yep. All of us actually want to be better.
That kind of timeline you're talking about obviously is a relatively long one. The economic conditions are changing rapidly right now. Central banks are raising rates aggressively. They clearly want to tamp down demand. Is there a danger that actually you end up kind of effectively raising capacity into a recession?
Yeah, I think there is a risk that that happens, and that's why I think, we can be bold in thought, but let's just be a little bit cautious indeed. because it would be such a shame to suddenly find ourselves with too much capacity and either having to pull that capacity out or drop prices in an environment where one of your largest input prices is now double. So, you know, the cost for me to fill up a 7879 and get from Auckland to LA has gone from $42,000 US to $96,000.
So it's more than double?
More than double.
How, is that something you think is going to stick? It's very hard. The forward curves at the moment are pointing to relatively elevated fuel prices for quite a long time.
That's how we're thinking about it too. Now, you know, I can't predict any better, I think, than anyone else in terms of what's going to happen, and there are obviously external forces at play here. But once again, we just need to be a little bit cautious, because if it is around for a while, then, you know, these prices do actually need to be passed on, unfortunately.
The industry obviously as well has to, while this is all going on, make the shift to being more carbon neutral. How inflationary is that going to be? Adding on to, so where we are now is jet fuel's come up. It was about 4 times cheaper than sustainable aviation fuel. Now it's about half as much. But nevertheless, we've got to make that shift. That's going to be inflationary as well. How do you factor that in?
Well, the first thing I'd say is what a wonderful time to be in the aviation industry, isn't it? You've had sort of 800 days of the industry being turned upside down. Now we're restarting, and we've got so many things coming at us. As you say, whether it's the price of fuel, whether it's to deal with stagflation, whether it's to deal with sustainability. So you've got to craft and navigate a way through all of these things. They're not going to go away. They're wicked problems. Yep. You're probably not going to solve them just in aviation alone. So this is going to be a case of, I think, private and public working together, both those sectors working together and coming up with new ways of working to solve problems that are truly wicked problems.
Yep. I can't work out if you were sort of saying it's a wonderful time to be in the aviation industry, whether that's slightly tongue-in-cheek. But
no, actually, I'm serious.
Okay.
Because it's in periods like this that the greatest change occurs. And, you know, I think we will see that. I suspect if we came back to Doha in 10 or 15 years, I think we'd say, what a period aviation has been through.
Great to catch up. Nice to see you. Thank you very much indeed. Greg Foran, the CEO of Air New Zealand. Fran, we are having a great day here at IATA. We're all looking forward to the gala dinner a little bit later on. Back to you.
I know, and apparently there's a big celebrity at the gala dinner, so I'm going to try and be guys plus one, otherwise he'll tell me all about it. Coming up, we look at France and Emmanuel Macron's, of course, voting over the weekend. This is Bloomberg.
When you think space, you probably think one space agency that travels under the radar is ESA, which is surprising considering what the European Space Agency has achieved and how vital it is to the global space industry.
We've collaborated with pretty much everybody who is involved in space exploration.
ESA wants to be a leading force in furthering humanity's mission into space.
Commander Ground, do you copy? Copy.
If we want to have successful human missions to Mars, we are going to have to learn to live and work off-world in a different way. The place where we are going to learn to do that is on the moon.
Can ESA help humanity take its next giant leap?
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
All in, the Fed's Christopher Waller says he would support another 75 basis point hike, saying the U.S. central bank will do what it can to reestablish price stability. Crypto on edge. Bitcoin struggles to hang on to the $20,000 handle, continuing its recent free fall amid current volatility. And in France, Emmanuel Macron loses his absolute majority in parliament after an unexpected surge in support for the far right. Well, good morning, everyone, and welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in Doha, Qatar, for the Qatar Economic Forum. Now, we have really some wonderful guests lined up for you here in Qatar. Day one, plenty of interviews from the conference in the coming days. So this is what's coming up exactly. First of all, we have Standard Chartered's Bill Winters. We also have VW's Herbert Diess, Boeing's David Calhoun. Plus, on Tuesday, we'll also be speaking with the Tesla chief executive, Elon Musk. So you don't want to miss that conversation. Now, the French President Emmanuel Macron's centrist alliance has lost its outright majority in parliament, and that, of course, follows the weekend of parliamentary elections. Now, for more, we're joined in France by Caroline Conan, who's been covering the election very, very closely. So, Caroline, what are the results of this runoff, and what does this actually mean for Macron? Why did he do so badly?
Francine, there was a lot of thunder and rain last night in Paris, and it is a major blow for Emmanuel Macron. Some called it an earthquake, a massacre for the first time in 20 years. A president who has just been elected 2 months ago does not have a majority at the National Assembly that you can see just behind me. Emmanuel Macron fell short of the 289 seats he needed. He actually fell short of 44 seats, which is quite significant. And the NUP, the far left-wing coalition led by Jean-Luc Mélenchon, got 131 seats, which means that they are becoming the main opposition party. And Francine, the NUP is actually a party that defends proposals such as increasing the minimum wage or transforming the debt held by the ECB into zero-coupon bonds. But the biggest surprise, Francine, from last night actually came from someone we had almost forgotten, Marine Le Pen. Usually the two-run system makes it very difficult for the far right of Le Pen to get a lot of MPs. This wasn't the case last night. The National Rally got nearly 90 seats, which is a historical record. Their last record in 1986, they only had about 35 MPs. So clearly a big victory for Marine Le Pen. Emmanuel Macron will be stuck between the two extremes and will have to form some very fragile alliances and fight on every bill and reform.
So, Caroline, what does it mean that Emmanuel Macron can actually get done in the second term?
So it will be much more difficult than during the first mandate because he will have to form these alliances, and clearly this could undermine investor confidence and rise France's borrowing cost, which is actually a very difficult time at a time of rising interest rates environment, and of course the very high level of French debt already, which is above 110% of GDP. So this might be much more challenging for Emmanuel Macron. He wants to pass first the pension reform, raising the retirement age to 65 but the far left has the exact opposite view. They want to lower the retirement age to 60. So we could see some yellow vest type of protest in the streets, and it's going to be extremely difficult to govern like he did during the first mandate.
I mean, it's very clear that the leftist coalition is second and there's a large gain for the right. What happened that didn't happen in the presidential election?
So clearly the two-round system means that locally you had a lot of battles between on one side the national right and Macron's party, and on the other side the far left and Macron's party. And what happened with this far right wing is that a lot of people who actually didn't want to see Macron having a majority actually voted for the national rally because of that. So clearly this is historical for both the far left and the far right. This is something we've never seen before. We have a situation which is similar to the late 80s with Michel Rocard, who had to really battle to pass any kind of reforms. It's a situation that is close, Francine, to what we could call a hung parliament in France.
Caroline, thanks so much. Caroline Conan there with the very latest of what's happening in France after those legislative elections. Now, coming up, Germany steps up efforts to bolster gas storage levels as Russia squeezes flows into Europe. We'll have plenty more on the energy cost. This is Bloomberg.
Happening on Wall Street.
It's the basic law of economics.
It validated what the market was already pricing.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management.
It's a challenging dynamic.
We could continue to see that kind of strength.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua for the Qatar Economic Forum. Now, it's the second annual Qatar Economic Forum, powered by Bloomberg, and global business leaders and heads of state are convening in Doha to tackle some of the world's most pressing challenges through the lens of the Middle East. Now, let's get straight to Manus Karani, who joins us here in Doha. Manus, I'm so excited, actually, that we get to speak to each other in Doha. And this is really your region. You're an expert in the region. We'll talk about energy. We'll talk about how this region is also transforming.
I think there's a huge shift here. We are in the land of plenty of gas. And the Qataris have already sort of reached out globally to Total and Claudio Descalzi. Didn't give me an interview yesterday, but he was here. And so really gas, we're at the epicenter of gas. Who's going to be part of that gas transition for Europe? It's a long-term solution. It's not for the eye of the storm now. But I think we're going to debate three E's. I think we're going to talk about the energy transition and the crisis. We're going to talk about the exogenous shocks, and we're going to debate recession within an inch of our lives.
And I guess how they deploy all this extra cash, right? So, I mean, if you're sitting in the Gulf right now, you're making a pretty big windfall.
There's been a huge flow of money. The door's closed to Russia. So a great deal of emerging market money flowed from that traditional avenue route into Russia, here into the Middle East, whether it's to Saudi, the largest equity market, or indeed to the Qatari banks. There was this flow of money and this flow of funds. We forgot the third E, Elon Musk.
We're so excited because he's speaking to us, to our editor-in-chief tomorrow.
He is. And the reason why I want to sort of dovetail with that is he is already talking to the Qataris, you understand, for 300 million, a third of a billion. I think a billion sounds much chunkier than 300 million. So he's trying to get...
This is what, for Twitter?
For Twitter. So, you know, why not? This is the perfect platform. Come, talk a little bit about Dogecoin, Bitcoin, and maybe even, you know where your funding stands on Twitter and the great debate.
We're going to be watching that interview. That is, without a doubt, the interview of the week. Mattis, I'm looking forward to actually just, talking markets with you and catching up.
We're live.
We are live. Mattis Cranny joining us there live from the Qatar Economic Forum. And Mattis starts way earlier than me, so tomorrow morning watch him at what, 6 a.m.?
I have breakfast much earlier than you.
There you go, and he's on air to bring you all of the news much earlier than me as well. Now, from the London of Plenty of Glass, let's discuss its lack in Germany. It's to step up efforts to bolster gas storage levels as Russia squeezes flows into Europe. The country's economy minister, Robert Habeck, says there are also plans to fire up more coal plants to conserve natural gas. Well, joining us now is Will Kennedy with the very latest. He is Bloomberg's executive editor for energy and commodities. So, Will, first of all, what is the latest on Russian flows into Europe?
They remain constrained and gas prices remain elevated. Flows to Germany's biggest gas customer, Uniper, have fallen by as much as 60%. And I think there's real concern that they could get worse. Everyone's watching to see what Russia does, and there's a real concern that those flows at some point may fall further. What this means for Europe is that there was a certain amount of optimism about how far we'd be able to fill our gas reserves this summer as we prepare for what's likely to be a tough winter ahead. Gas reserves had been filling up, both on Russian gas and LNG imports, but with these lower flows, those calculations are quickly being remade.
Bill, where are we on Germany's plan to ration gas?
Yeah, I mean, we had Habeck yesterday talking about what they will do in response, and, they've got some ideas about guaranteeing the financing of reserves to try and increase or at least maintain at as high a possible level the flows into storage and make it worthwhile for traders to store gas. But they're also talking about bringing back more coal-fired power plants. And it's an amazing thing that for the first time we have a partly green government in Germany. Habeck, of course, the leading member of the Green Party, has campaigned his whole political life to end Germany's reliance on fossil fuels. And because energy security right now is paramount, they're bringing back coal-fired gas plants that they had been wanting to mothball. But it's worth saying that it's not just Germany. The UK has also said that it's going to operate gas plants this winter, which it had expected to close. Obviously, Britain had gone further than Germany, but in every European country, people are having to look at the pace of energy transition because gas supply is likely to remain so disrupted over the coming months.
So, well, if you look at the price of oil right now, it's stabilizing, but it was down 7% on Friday. So what exactly is happening to these crude prices?
Well, the crude futures market has been very volatile all year, partly because of the flow of geopolitical news. And that scared a lot of traders off. So liquidity is very low. It was low on Friday. And when you get low liquidity, you often get sudden severe moves in price, and I think that's what happened in oil on Friday. Obviously, the macro background was the Fed action last week, which had people worried about how fast the global economy would slow down and what that might do to oil demand. But I think the lack of liquidity in the market probably exaggerated that move on a Friday. Now, what do things look like going forward? I think there is uncertainty about the trajectory of demand because there's so much uncertainty about the economy. But I think it's worth saying that so far demand is holding up very well in some parts of the world. You only have to look at what's happening at the world's airports and people coming back to fly and the pressure that's putting on the aviation system to know that demand is robust. And I don't think there's much reason to think that we've reached yet a big inflection point for the outlook for the oil market. There's been some retracement, but when you look at fundamentals of physical supply, physical demand, things still look very tight.
Well, thanks so much, Bloomberg's Will Kennedy there. Now, let's stay on the energy story, but let's also talk about nuclear. Now, one possible solution to this energy crisis is gaining more attention, and that's the nuclear power startup Nucleo, raising $315 million to help develop technology towards its first pilot projects in France and the UK. Now, the London-based company aims to bring down the development and production costs of nuclear power. So let's get straight to Stefano Buono. He's the founder and chief executive officer of Nucleo. Stefano, thank you for joining us. I mean, there's a lot riding on this to make sure that it works, that it's safe, and so there's also a lot of skepticism amongst the population. First of all, how's funding going? Do you have enough funds? How close are you to making this cheaper?
We are very close because we have been working on that in the past 25 years, and we have learned from the past. We are launching the technology that is the one of our fast reactors, and this technology can be used as fuel the radioactive waste of the current reactors. This technology was tried in the 70s, and sodium was used. This technology was tried in the 70s.
But Stefano, in terms of timeline, so how close are you to actually start a proper operation for this?
We are close 7 years. We want to switch on our first reactor by the end of this decade.
So, and do you think that the invasion of Ukraine accelerates your plan? Are you seeing more demand, both funding, but also more acceptance amongst governments and policymakers?
I would say yes, because there is a need for energy independence. And also, not only the need is focused on the price. So now nuclear can answer to 3 questions that are very urgent for the population. The energy independence, because you can even just produce without mining anymore, just using the waste that is present in UK. That's very important. Then the cost. We have tried to bring down the cost up to a half of what is the cost of a very big reactors of today. And of course, there is also, please.
So how close? So first of all, in terms of technology, how is this technology different from the last one? Is it cheaper? Is it safer? And again, I don't know what the stamp of approval is. What are policymakers and what are the governments telling you about this?
It is safer because we use a coolant that is different, is lead, that essentially avoid any chemical risk to the plant, and on which you can deploy passive safety system. So the nature can switch off the reactor in any case of malfunctioning. And even if the operator makes errors, like the one that have created the accidents of the past, almost always been a human error. So the nature does it, physics. So you create what is considered passive safety.
Stefano, how much more funding do you need? What are the next funding rounds, and who's giving you the money?
It has been a very interesting moment because I believe there is a transition in this industry, like the transition that happened in the space industry. So private money is flowing into the industry, into good projects. We need still a lot of money. We believe that to launch the full industry, we need 3 billion. So this is just the start. But we have a large group of investors. This is just seed money. And probably we'll have to anticipate our needs of funding already from next year.
All right, Stefano, thank you so much. Stefano Buono, their founder and chief executive of Nucleo. Now, coming up, we'll talk a lot more about decentralized finance communities in a race to protect themselves against a cascade of liquidations, sometimes by employing unprecedented measures. More on the crypto space. That's coming up next, and this is Bloomberg.
When you think of cutting-edge technology at sea, you might be thinking of stuff like this. But there's an incoming revolution on the high seas that isn't quite as sexy, but could be significantly more impactful.
Container shipping is the key component of global trade. About 80 or 90% of all the world's goods are transported at sea at some point.
But there's a significant unseen cost to the modern era of global commerce.
About 3% of all the world's CO2 emissions come from shipping.
3% may not sound like a lot, but that's roughly comparable to the entire CO2 output of Germany. Since reducing trade isn't a likely option, what about a technological improvement to help reduce the emissions from these well-stocked maritime behemoths?
Front Row, exclusive interviews with the most influential figures in finance. Lloyd Blankfein.
Deflation is a terrible thing. Inflation you could tolerate.
Kathy Wood.
Tesla will be in the pole position to dominate.
Jeremy Grantham.
We've had a very, very abnormal honeymoon Goldilocks period.
First available on the Bloomberg Terminal, then on Bloomberg Television and Bloomberg.com. Front Row, the best seats in the house for business's greatest minds.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
Economics, finance, politics. This is Bloomberg Surveillance, early edition of Francine Lacqua here in Doha for the Qatar Economic Forum. Now let's get straight to your Bloomberg Business Flash. In London is Laura Wright. Hi, Laura.
Hi, Francine. Cleveland Fed President Loretta Mester says the central bank's delay in raising rates is partly to blame for increasing recession risks. She told CBS it will take several years to return to the Fed's 2% inflation goal. Her view on slowing growth was shared by U.S. Treasury Secretary Janet Yellen, who told ABC that unacceptably high prices are likely to persist for the rest of this year. Air India is considering buying as many as 300 narrow-body jets in what could be one of the biggest orders in commercial aviation history. Bloomberg understands the carrier may order A320neos from Airbus or 737 MAX models from Boeing, or a mix of the two. The possible move comes as the formerly state-run airline looks to overhaul its fleet under new ownership. The airline industry trade body says the sector will be able to sustain its pandemic rebound even with a global economic slowdown. Speaking to Bloomberg, IATA Director General Willie Walsh says there are headwinds, but the outlook is positive.
There's clearly pent-up demand that is being fulfilled at the moment, but all of the research we're doing, just reaffirms that people want to get back flying again. There are headwinds. I'm not going to, ignore the fact that we're facing some challenges, but actually the outlook remains very, very positive.
And that's your Bloomberg Business Flash. Francine.
Well, thank you so much, Laura Wright. Now, Bitcoin struggling to hold above the closely watched $20,000 level following a volatile weekend. On Sunday, the token holders of Solend, a lending app on the Solana blockchain, voted to temporarily take over a large user's account that faced a threat of a large liquidation. Now, though that decision was actually reversed in a second vote today, it was an extreme move for DeFi. That appears to be a first. Well, joining us now is our crypto reporter, Emily Nicole. Emily, this is huge. So what's at stake here?
Yeah, so obviously over the last week, we've seen a lot of pain in crypto markets, and those falling prices have in turn meant that a lot of positions across the sector have been getting liquidated. A process in crypto which happens automatically. Bots and traders will be scouting opportunities for arbitrage and picking up those liquidations. And so often there could be a risk of something being immediately liquidated in a way that could affect a blockchain if the position is big enough. That's what happened with Solana and Solend, the crypto lender. A crypto whale, as it's known, an address with a lot of tokens, was at risk of being liquidated. So they overtook that position temporarily to try and mitigate the risk there.
So, Emily, what's going on in the crypto market this morning? It seems to be stabilizing somewhat, but again, from a quite low base.
Yeah, the prices seem to be oscillating around the $20,000 mark for Bitcoin, but it's still very much a sea of red across most tokens today. Some are trying to hold on to the gains that they may have gained over the weekend, but a lot of them are still struggling amid this particular period of real uncertainty for traders. Lenders are still suspending withdrawals. We're still seeing problems at hedge funds in crypto, and particularly with the issuance to lend overnight, there's still no real end in sight for the pain in crypto markets.
Yeah, I mean, Bitcoin volatility is pretty huge. So what's, powering these moves, or what's behind those moves besides the Solent story?
So overall, as we see positions getting liquidated, that means that traders are having less money available for them to invest in new tokens, buy early, and even just, having confidence in where the bottom of the market is, I think is a real issue right now. Obviously, we went below 20,000 over the weekend, as low as nearing to 18,000 mark, actually. And that has caused a lot of confidence issues because normally we look at a tracker where you could say if you invest in Bitcoin 4 years ago, you might have made money by the time this 4-year mark comes around. But falling below that mark over the weekend means that's no longer true. That was a key sentiment tracker for most Bitcoin investors and showing why it's something worth buying. And so looking ahead to today, if you can't rely on that, then what is the purpose of buying Bitcoin now? You'd have to ask the bulls, I guess, like MicroStrategy and others.
Emily, thank you so much, as always, with all of the insight. Emily Nicole there, our crypto reporter. Now, we're here in Doha, of course, in Qatar for the Qatar Economic Forum. It's day one. Plenty of interviews coming from the conference in the next couple of days. Now, we have Standard Chartered's Bill Winters, VW's Herbert Diess, Boeing's David Calhoun. I'm also doing a pretty good energy panel tomorrow with the Exxon chief executive. Then tomorrow also we'll be speaking with the Tesla chief executive, Elon Musk. That's a conversation that our editor-in-chief, John Micklethwaite, will do. They'll talk Twitter, they'll talk Tesla, and of course they'll talk about some of the Qatari money going into funding the Twitter deal. Now, Bloomberg Surveillance continues in the next hour, of course, with Matt Miller and Katie Lyons in New York, Anna Edwards in London. For the moment, stocks in New York pretty much steady. Again, this is after the biggest sell-off in a week that we had. U.S. futures actually gaining a touch as well. Investors assessing the outlook for economic growth, but also concern about monetary tightening. This is Bloomberg.
We know that it's highly transmissible. We know that 2 doses of vaccines, Pfizer vaccines specifically, neutralize the virus, but not as efficiently, because various studies showing that reduction up to 40-fold, meaning that a 3rd dose is a must for it to successfully neutralize the variant. What we don't know is still that what are the effects of mix and matching between vaccines, and what are the capabilities of antibodies produced from this mix and matching in neutralizing Omicron. Because as we know, many parts of the world use different types of vaccines. And that would be a great data to look at. It will be also great to look at, because majority of the studies done uses a small sample number, and most of the time when you translate it to real world, the data changes. So it will be really good to look at large-scale data of the ability of antibodies from vaccines to neutralize this variant. Grateful here today that the virus, Omicron variant, still uses ACE2 receptor as its main entry. It means that all of the vaccines which are designed with spike in mind still works. Imagine if it uses a different receptor other than ACE2. None of the vaccines would work today. So I think that is the best news that we got from all these studies which came recently, the past couple of days.
stocked early enough all these precious materials you were just mentioning, and we were on the lucky side that our prognosis was spot on in a way, forecasting what kind of material we would need and what quantity we would need.
Isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Good morning. Welcome to a special edition of Bloomberg Markets. I'm Anna Edwards. It's 10 a.m. in London, 5 a.m. in New York, and 5 p.m. in Hong Kong. Our top stories today. Locked in, Treasury Secretary Janet Yellen says higher inflation will remain for the rest of the year, while the Fed's Christopher Waller says he would back another 75 basis point hike for the U.S. Central Bank. In France, Emmanuel Macron loses his absolute majority in Parliament after an unexpected surge in support for the far right. And the airline industry looking to bounce back from unprecedented pain. We will speak to JetBlue's CEO Robin Hayes from the International Air Transport Association General Meeting taking place in Doha. Welcome to the program, everybody. It is 2 hours, or we are 2 hours into the European trading session, and we have a slightly positive picture for you across risk assets. No US equity trading, no cash trading on treasuries, of course, because it is a public holiday over in the United States. That's why Matt Miller and Kaylee Lyons are both off today. But I'm here, and I'm taking you through what is happening here in Europe. We've got European stocks up by 0.4%. The Stocks Europe 600 then eking out some gains. We see a little bit of underperformance by the French market. Some sectors a little bit damaged in terms of sentiment by Emmanuel Macron, the president there, losing his absolute majority in Parliament. This is the natural gas benchmark here in Europe, up another 8.7%. Last week, we saw the gas prices in Europe jump by the most since the week where we saw Russia's invasion of Ukraine. And all of this because Russia is slowly dialing down the amount of gas that it is sending to Europe. The major pipeline, Nord Stream, operating at just 40% of its usual capacity last week. And the same is true today, still applies. And so as a result, we see natural gas prices going higher. That will matter more in the winter, of course, than now. But of course, it matters now because European countries are trying to restock those stores and make sure there is enough gas available for the winter. This is iron ore. Over in the Singapore session, we saw it down by more than 7%. A lot of concern, of course, about what is going on in China, the property sector there, growth in China broadly with the COVID zero policy still in place, and that continues to weigh on iron ore, as does tightening by the Federal Reserve and ongoing expectations of tighter central bank policy. Bitcoin back above 20,000. It was a wild ride over the weekend, dropped almost 15% just during Saturday's session, then managed to bounce back up again. So continues to flirt and maybe seems to be getting a little bit of support around that 20,000 mark, although that wasn't true on Saturday. We'll keep watching that and the aftermath of these moves. Let us get a multi-asset conversation then. Let's talk to Max Kettner, Chief Multi-Asset Strategist at HSBC, who joins us now. Max, ongoing concern then about tighter interest rate policy globally, ongoing concern about whether we get to a recession, and if so, how quickly. We heard from Janet Yellen. She says there's nothing certain about whether we get to a recession. Nomura, though, now factoring in a recession in the fourth quarter of this year. What's your latest assessment of how likely recession is in the US?
Yeah, good morning, Anna. I think in terms of the recession probability, I think wherever we look in terms of our indicators, they all look pretty recessionary for the next sort of 3 to 6 months. And the problem is we don't really see that as sort of one big factor driving it, right? Normally you'd be sort of coming up with, let's say 2007-8 subprime rate mortgages, the housing market is the next big thing to watch. This time around, the problem really is it's much more broad-based. So we see the inventory overhang that we built up in the second half of last year, that's now dragging down on growth. We see very definitive indications of new orders, i.e. demand really going down quite sharply, particularly from the regional Fed surveys, Housing has started to turn, right? Expectations haven't derated that much yet. So the problem really is we see very broad-based weakness. It's not like if we plug this one hole that everything is going to be fine. It's much more there's almost too many holes to plug.
Right. And so do you see demand destruction then, evidence of demand destruction? I mean, if we keep to the US at the moment, Max, is that what you witness?
I think, over the next 3 to 6 months, yes, we will be starting to see that, right? For now, I think you're starting, you still continue to see sort of pent-up demand on the consumer side from these very high levels of excess savings. That's fine. But I do wonder how long that can continue, particularly given, that you see private credit sort of being on a tear in the last couple of months. So from a consumption perspective, we're still fine by now. However, looking into the second half of the year, not only manufacturing, but also consumption, I think we will be seeing quite a few nasty surprises. And that, of course, isn't good for risk assets across the board.
And what's priced into equities? If that's the future that you see as we head into the second half, Max, things getting more difficult for consumers and for businesses, what is already priced of that?
Yeah, look, I think if we look at equities standalone, actually, we'd probably be closer to pricing a recession. But we know, obviously, asset classes don't function in isolation, right? It's one thing is affecting the other. The rates market is influencing equities. Credit and equities are interacting. Now, if we look from a cross-asset perspective, so equities versus fixed income, we're a bit further than halfway there, but it's not really yet even at the sort of mid-cycle slowdown pricings that we had occasionally in the last decade. So we're not even at these levels yet. Equity standalone might be fine, but the cross-asset pricing is by no means sort of extremely exuberantly bearish, such that the levels right now are already the ones where you want to go back in. And in particular, also on the credit side, when we look, for example, at a dollar investment grade credit within the credit space of, let's say, triple Bs over single As, but also in high yield triple Cs versus double Bs, there aren't any sort of recessionary concerns priced in yet. So we're getting closer to it, but it's not yet at the levels where we're like, okay, this is the definitive buying territory now.
Okay, so some assets pricing this in, but others not. What about what you see in the dollar, Max? Because it seemed for quite a while there was talk about whether we'd reached peak inflation in the US, and that turned into, well, maybe we've seen peak dollar. And then we got a surprise pickup in US inflation to yet another high. And people questioned once again whether we have seen that peak dollar. This matters for so many assets and for so many geographies, of course.
Yeah, I guess, on the dollar, we still expect a bit of strength over the summer months. And I think that is consistent with some downside surprises in global growth. In that instance, you wouldn't really see investors sort of rotating into cyclical currencies, into currencies that are going away from the dollar. That is much more sort of the safe haven flow going back into the dollar. Now, I do have trouble, and I do have a problem really with the view of, okay, if we have peak inflation in the US and if that turns around, then that is peak dollar, because we've always got to think about, okay, so what about the other currencies? What about the euro? What about sterling? What about, the yen? Are they from a relative perspective, are they suddenly becoming more attractive? If, for example, we've now talked about recession risk in the US, if indeed recession risk in the US is becoming absolutely heightened in the second half of the year, does that mean the UK or the Eurozone, for example, are going to be completely immune from that? Or does that not mean that they might be actually even worse off, so that, the dollar still remains fairly attractive, I think, over the next couple of months?
Right, and of course, as you say, thinking about the other side of some of these crosses important, Max. Let's think about euro-dollar then, or think about European assets more broadly. The ECB clearly pivoting towards something more hawkish, but behind some of the G10 countries in terms of the speed at which they're doing this, and fragmentation of bond markets may be something that holds them back a little bit. We've heard some voices saying that they won't allow fragmentation to hold them back in terms of rate hikes. How quickly can we get to those rate hikes, and can they keep that bond market under control and prevent excessive fragmentation?
Look, I think ultimately they probably can. The problem with the ECB is always that they have, of course, this mandate of proportionality. So they need to show that their actions are proportional. Otherwise, you run into particular legal trouble. So there are some problems now with the proposed sort of PEP program and with the reinvestments that might be sort of violating the capital key, right? If you actively buy BTPs and sell bonds, you know, that you might get into trouble with the capital key there, and that might get you into trouble from a legal perspective. So in our mind, in our allocation, we are still underweight on the periphery over calls, on BTPs over bonds, because we don't think that has just been the end yet. We are getting, again, similar to risk assets more broadly, probably closer to the point, but you know, so far I think the details of the program have been very, very scarce, and that's not the time just yet where I would want to be putting my money into the periphery.
Yeah, as some suggest, of course, it's difficult to come up with those details with the legal concerns that you outline, Max. What about UK assets at this point? We're going to get inflation data from the UK on Wednesday. There's a lot of politics to talk about here in the UK this week. And as we keep track of that, what is in the driving seat for the pound, for UK assets?
Look, I think the pound still remains vulnerable because of this very, very challenging growth picture in the UK. And that, of course, means for large caps, so for the FTSE 100, that is actually quite good, right? Because the lower pound will mean a bit of a boost for the more export-oriented UK large caps. But on the other hand, if we look at the FTSE 250, so the mid caps, the much more sort of the companies that are much more geared towards the domestic economy, they will probably remain under pressure, particularly relative to the FTSE 100. But sterling, to us, really still there is a bit more downside, given particularly this, number one, this challenged growth picture, and number two, the Bank of England being somewhat of sort of a hawkish, dovish outlier, right? Still being sort of hawkish, still pointing towards more rate hikes, but clearly, you know, perhaps having more of the downside risks on their radar compared to perhaps the Fed and the ECB.
You talk about a challenged growth picture, Max, in the UK. That takes us nicely to China, doesn't it? And the extent to which you think it is possible for the authorities there to balance out the headwinds for the economy created by their own policy, by the COVID zero policy. How possible, or how much should we expect that they try to balance the effects of that with other policy impulses? Because, I mean, it seems almost daily we get talk of, well, maybe there will be this support coming for the Chinese economy. I know there was talk of support for manufacturers today.
Yeah, I think that there will be more sort of fiscal and monetary stimulus. I think the difference to perhaps the last 10, 12 years is going to be that there's not going to be the big one-off bazooka, right? It's probably going to be much more gradual, not to harm the currency too much. Given that the Fed and other major central banks are just on a completely different, i.e. different hawkish trajectory. So that probably means not a big bazooka in terms of fiscal and monetary stimulus, but more like slices of more broad-based stimulus, right? But what we have seen in China already clearly is that the credit cycle has troughed a couple of months ago. So we are seeing the credit impulse already going a little bit higher. It's a bit too early to position for that just yet. I think that is probably a story towards the fourth quarter and towards the first half of 2023, right? If we've seen, once we have seen peak dollar and once perhaps those tailwinds from China's credit impulse come through, then that's the time. It's 3-4 months too early to really position for that.
Okay, just getting a red headline across the Bloomberg, Max. Be interested to get your thoughts on it. We're hearing from Martins Kazaks, who, of course, is a ECB Governing Council member. He's speaking in an interview saying the ECB will act with a cool head on market volatility, saying the current problem is the speed of market repricing. It's interesting to see, actually, or maybe, well, give us your thoughts on how effective you think the words used by the ECB have already been in calming down the periphery of the bond market.
Oh, I think if we see the price action since last week, since the ad hoc meeting from the ECB, they've been very, very effective, particularly given, and you've just mentioned it before as well, that we haven't really heard an awful lot of details in terms of the program just yet. So in terms of the effectiveness of the verbal intervention, they've been very, very effective. Now, when he says the ECB is going to keep a cool head, that's good to know. I mean, what we've seen in the last 1 or 2 weeks, I think the bigger issue is that the markets, investors, are not really having a very cool head. So the big issue is, of course, the magnitude and the speed of the repricing. And my fear is that with a lack of details, there might be another test on the periphery, on the ECB, before we sort of really get to more attractive levels.
And in terms of spreads and where you think the trigger point is for the ECB to take action if they're going to operate with with this cool head, as Martins Kazak says, what is the spread that triggers this, or is that too crude to say it's just a number? I mean, who defines when the spreads get too wide between the periphery and German bonds, for example?
Yeah, I don't think it's a definitive number, right? It's not going to be, at 324 basis points, the ECB is going to panic. I don't think that's going to be it. I think it's much more perhaps a couple of things really playing out in tandem. So if you look perhaps at the credit market and the rates market together, so if you look at BTPs, if we see the long end selling off of BTPs, but also the short end, right? So really the short end perhaps selling off even more aggressively. So that's sort of pointing really to sort of upcoming funding concerns. And on top of that, perhaps in European credit markets, perhaps primary markets drying up, perhaps the credit curve starting to bear flatten. Those are the sorts of things that have real economic implications, because those are the sorts of things that really affect refunding, they affect the real economy. That's the sort of stuff that the ECB doesn't want to see. So rather than looking at a particular level, it's more sort of the interaction of various asset classes, the short end of BTPs, credit markets, stressing credit markets. That's the sort of things that I think the ECB will want to prevent.
Max, thanks so much. Max Kettner, Chief Multi-Asset Strategist at HSBC. Thank you for joining us on the programme. Coming up here on Bloomberg TV, oil prices steadying after plunging almost 7% during Friday's session. So where do we go from here? We will talk energy, we'll talk oil, we'll talk gas with Amrita Sen of Energy Aspects next. This is Bloomberg.
When you think space, you probably think one space agency that travels under the radar is ESA, which is surprising considering what the European Space Agency has achieved and how vital it is to the global space industry.
We've collaborated with pretty much everybody who is involved in space exploration.
ESA wants to be a leading force in furthering humanity's mission into space.
Commander Ground, do you copy? Copy.
If we want to have successful human missions to Mars, we are going to have to learn to live and work off-world in a different way. The place where we are going to learn to do that is on the moon.
Can ESA help humanity take its next giant leap?
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
This June, in honor of Pride Month and Juneteenth, Bloomberg brings you a special Equality series every Thursday in June at 1 p.m. Eastern. Bloomberg Equality, celebrating inclusion this Pride Month and all year long.
Welcome back to this special edition of Bloomberg Markets. I'm Anna Edwards, live from London. Public holiday, of course, for Juneteenth over in the United States. So Kaylee and Matt are off today, but I'm here taking you through what's going on here in Europe and beyond. Let's get a quick check on these markets. And European equity markets are up by 0.2%. US futures, for what it is worth on a day when there's no cash trading in the US, are pointing a little bit higher. Nasdaq futures up by 0.6%. Some of the same buoyancy lifting the stock 600. A bit of underperformance, though, in the Paris market as a result of the outcome of the parliamentary election in France. Natural gas prices on the move higher, iron ore prices moving lower, geopolitics lifting the former, concerns about growth weighing on the latter. Those are both in focus for us. Bitcoin also struggling to, has managed to get back above 20,000 after losing 15% almost of its value during Saturday. But a volatile weekend, of course, for Bitcoin. Let's get to the commodities conversation now. And oil has been steadying after plunging almost 7% on Friday. Amrita Sen, founder and director of research at Energy Aspects, joins us now. Amrita, remind us of what has led to such a big move in oil prices. I mean, was this all to do with factoring in more tightening from the Federal Reserve, what that might do to US growth? Is that what has been weighing on sentiment for oil of late?
Oh, for sure. There hasn't been any change in fundamentals. And honestly, the Friday's move came on the back of pretty much no news. And I mean, everybody was talking around, have you seen a headline? A delayed reaction to the Fed raising interest rates by 75 bips. But equally, I think the market if oil markets, I'm saying, they have really not responded nearly as aggressively as other markets, right? Particularly the equity. So somewhat of a delayed reaction, but we would also argue that these demand fears are premature. We are still seeing very, very strong demand growth numbers, not just out of Asia, but also out of Europe. Even the May preliminary numbers out of Europe, despite record high prices, still show strong growth and now back above COVID levels. So again, some of this is just jitters and sentiment, again, weakening at a time when liquidity is thin with the US holiday, but we still don't see any changes in underlying fundamentals.
Okay. So, yeah, that was a really big move on no particular news, wasn't it, Amrita? So how intact are your expectations for the summer driving season? We saw a commentary from US Energy Secretary Jennifer Granholm talking about what the driving season might look like, saying that we know this is going to be a tough summer because driving season just started, and we know that there will be continued upward pull on demand. How much upward pull before we see demand destruction?
Well, we are factoring in about a 5% decline versus 2019 levels for US gasoline demand. And that's really been the only place we have seen some form of a reaction in demand to higher prices. It's been in the US. I mean, if you're comparing like-for-like prices, let's say the national average in the US is about $5 per gallon. That's almost $9 in Europe on average. But even in places like Asia, India is also $5 per gallon, but you're not seeing any signs of demand slowing down. But yes, in the US, we have seen some slowdown. California in particular, with $6 gasoline prices, you've seen definitely, the momentum slowing down, even if not like seeing double-digit decline. So yes, there will be a seasonal increase. I just got back from the US, and I think the one thing I'll say is that there is still a lot of pent-up demand. This is the first season after almost 3 years where there's no restrictions. But I will also mention this is that those who may not be driving are absolutely choosing to fly. Jet demand is flying right now. Sorry to use that pun. And you can see that across flight numbers, the demand and the price of jet fuel as well. So it's not, even if it's not gasoline demand, overall travel demand will still be very, very strong.
Okay, yes, as life shows some return to normal, the pull to travel is great. And Rita, a totally different dynamic for European gas prices, natural gas prices at the moment. How close do you think we are to some form of rationing of gas usage, either later in the summer or as we go into the winter in Europe?
Look, we've been calling for the need to ration in Europe, and particularly now with the latest move, Freeport disruptions in terms of LNG, and then Gazprom reducing flows on NS1 to Europe, and you've got the maintenance coming up in mid-July. So we absolutely think to balance this market, you will require some rationing in the winter. Now, having said that, this morning we've seen Germany come out and say that they are going to bring back coal-fired plants from its reserves. So there will be measures like this taken by the the government to, in some ways, keep the lights on. And I think that's where the biggest policy uncertainty lies. And to an extent, this is the biggest risk around trading some of these markets. I don't think for energy as a whole we've ever been exposed to such level of policy risk. And you have all these kind of 2035 climate goals on the one hand, but in the very short term, it is as simple as, do we get to keep the lights on? And if that's the case, then you might actually see a lot of governments switching coal back on.
Okay, thanks very much, Amrita. Thank you so much for your time. Amrita Sen of Energy Aspects. Quick check of the markets, and you can see we've been talking about what natural gas prices are doing here in Europe in the context of that very conversation we were just having there with Amrita. You can see that energy prices have been pushing higher once again. As I said last week, we saw the biggest gain in that. That's that TTF natural gas price you can see there. That is the benchmark in Europe. We saw the biggest weekly gain in that price last week as a result of Gazprom turning down the amount it's sending to Europe. That remains the case. Let's get to French politics. French President Emmanuel Macron losing control of the National Assembly after the far left and right made a strong showing in Sunday's vote. For the impact, we're joined now by Caroline Conan, who's live outside the National Assembly in Paris. Caroline, what do you make most of? The fact that the left did so well in second place, or the surge of the far right to become more of an established voice in French politics? What's the biggest takeaway?
Clearly, this is an earthquake because Emmanuel Macron is going to be stuck between the far left wing of Jean-Luc Mélenchon, this NUP coalition who got 130 seats last night in this runoff, and on the other side, the far right wing of Marine Le Pen, who actually was the biggest surprise last night. The National Rally got nearly 90 seats. This is actually historical. They had never held so many seats in parliament, which means that Marine Le Pen will be able to have a group in parliament and influence a lot of the agenda and some of the decision-making process. In a nutshell, Emmanuel Macron fell short of a majority by about 45 seats, meaning that he will have to build a fragile alliance, possibly with the traditional right wing, the Republicans, and fight on every single bill and reform. And of course, this will undermine investors' confidence, especially if there is little room for maneuver and fiscal adjustments.
Caroline, thank you very much. Caroline Conan talking to us there about the impact of that parliamentary election on the French political process. Also talking to another guest earlier, they were talking about how this will have an impact on European politics, making it more difficult for Emmanuel Macron to get his domestic and more European agenda through. We'll get back to the markets in just a moment. This is Bloomberg.
almost the end of the year, but Bali is still quiet and empty. I am here in Kuta Legian, one of the main walking streets here that is used to be a tourist spot for beach, dining, shopping, but many shops here are still closed. Most of the outlets are either for rent or for sale as they have run out of business.
Saya kerjanya di sini udah lama, udah ada 10 tahunan di sini kerja. Masih sepi sih, nggak kayak dulu. Kalau dulu kan rame, sekarang ya ada 1-2 itu ada, tapi nggak kayak dulu. Kalau dulu rame sekali. Sekarang paling dapat jualan ya 100, 120 gitu, 200 ya. Kalau dulu sih ya nyampe dah 1 juta, 1,5 itu nyampe dapat jualan. Bisa sampai 2 juta dulu. Sekarang nggak pernah lagi dapat segitu. Sama aja. Belum ada turis ke Bali. Masih ya domestik aja.
While Bali has reopened its borders for foreign tourists since October, they're still not coming in. Many international airlines are yet to reinstate their direct flight to the island. Balinese people here really hope they can see more people from Australia, China, and Europe to come visit next year.
Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
It's a great question.
Great question.
Great question.
Great question.
Great question.
That's going to be the best question I get all night.
I'm glad you asked that.
Bloomberg Television. Top experts. Great questions.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Welcome back to a special edition of Bloomberg Markets. I'm Anna Edwards. It is a holiday, of course, in the United States for Juneteenth. So Matt Miller and Kaylee Lyons are off today. I'm here taking you through what's going on here in Europe and beyond. European equity markets are open. Let's have a look at where we are on these markets. And European stocks making gains up by around 0.25% this morning on the stocks 600. Natural gas prices, we just discussed this with Amrita Sen. Once again, it is what Russia is doing with the supply or lack of supply of gas to Europe, and that limits the ability of Europe to increase storage going into the winter. So that is pushing up natural gas prices here in Europe. Iron ore, though, on the other hand, being weighed down by concerns around growth in China. So iron ore prices through the Asia session down by 7.7%. Bitcoin has been on a really wild ride over the weekend. We were down by as much as 15% during Saturday's session. Bitcoin prices now jumping back up to over 20,000, though, at 20,766. Now, Bloomberg's Guy Johnson has has transferred over to Doha, joining us now from the IATA conference in Qatar for an exclusive interview with the JetBlue CEO, Robin Hayes. Guy, good to speak to you.
Anna, thank you very much indeed. Yep, Robin is here, so let's dig in to the conversation. Robin, there's so much to talk about. Congratulations on your term as chair of IATA. That's now come to an end. Yes. I think that probably puts a smile on your face. There it is. Let's talk about what's happening in the travel industry right now. Every day, we're seeing problems being caused at airports. They may be weather-related, they may be ATC-related. They're all staff-related. When are they fixed?
Well, first of all, it's great to be here, and it's great to have everyone together again. Because we missed that. We did it in Boston last year, so it's great to be here in Doha. The aviation ecosystem is still, as you said, suffering from some of the same staffing challenges that we're seeing in other sectors too. The aviation industry is such a finely tuned machine that when you don't have all the right resources in all the right places at the right time, it can get challenged very quickly. What we saw this at JetBlue actually back in March, and we made a decision, as hard as it was at the time, because no airline wants to take flights out of the schedule, to pull our capacity down by about 10%, because we looked at what was coming up and we were just concerned about our ability to reliably operate.
Do you think the regulator now needs to step in and say, enough guys, you all need to reduce capacity by 10-15%? We're not even into summer yet, Robin.
Well, I think for me the most important thing, and what you see, Guy, and you're seeing it now, when things go wrong, people start pointing fingers at each other. The customer doesn't care. The regulators, the air traffic control system, the airports, all the ground handlers, the airlines, we all have to work together to do that. And if we don't think we can operate, whether it's airports or airlines, in a reliable way, we need to bring things down. but you need to do it early. Customers don't want their flights cancelled the day before. So we have to act now, and at an airport level or whatever, however we do it, we have to do our best to make sure that what we operate, we can do so reliably.
How long is that demand going to be around for? The Fed's raising rates aggressively, 75 bips coming through. We're expecting more of those kind of hikes to come, maybe even more further down the road. The objective here is to crush demand. So how long is the current demand surge that we're seeing going to last with the Fed doing that, with the possibility of a recession coming down the pipe?
No, it's a great question. We certainly expect to see more Fed rate hikes to kind of bring inflation back down. I think there are two things I'd say about aviation, though, that are unique. First of all, there is still a lot of pent-up demand. So we know that there's a lot of people who haven't traveled for 2 years and they're not traveling this summer because what they want to do is just not available. We just talked about we're all pulling flights down. It's going to make less seats available. The average price of airfares will go up because there's less seats. And so I do think you're going to see that demand flow into the fall. And secondly, business travel. Business travel is still coming back off a very low base. And so business travel is going to be better in Q4 this year than it was in Q4 last year.
Let's talk about the Spirit deal. 2016, you got Virgin on the block. Alaska wants it. You're in the running. Most people in this industry talk about the fact that effectively Alaska probably overpaid for that asset because of the fact that you were pushing them pretty hard. Are you worried that you may be getting into that kind of territory with Spirit?
No, I mean, we're very excited about creating this new national low-fare challenger. If you look at the value of the deal that we have on the table, it offers great value when you compare it with recent opportunities like Virgin America. But having said that, we're very excited. It's an all-cash offer. It's about a 60% premium of the competitive deal, and we have a lot of conviction to get it done.
What are you buying here? People are talking about the fact that you're buying basically Spirit's order book. They've got a lot of aircraft on order. Is that what you're buying here? What are you buying?
Well, guys, really four things. It is an order book that's exciting, and it has great similarities to our order book, so there's a lot of commonalities there. It's access to gates and infrastructure, airports that we want to be bigger in. We'd like to fly them more to markets like LAX. It's been very hard to get the gates to do that. A combined JetBlue Spirit will be a better competitor against the legacy airlines. We're buying access to skilled people. I mean, pilots, in-flight, maintenance. And we just talked about how we're all struggling with this. You take the JetBlue team and the Spirit team, both great teams, bring them together. It's going to allow us to continue to ramp up much more quickly. And also, by building this bigger national low-fare airline, just appealing to a bigger group of customers. Our loyalty program, our vacations program, all of these products we can bring to more people.
What are you prepared to give up to get it across the line?
We've offered unprecedented divestitures. I've been doing this a long time. I've never seen a potential acquirer say, you know what, we're going to give up these gates. We're going to give up these slots. We've already put that on the table.
What about the Northeastern Alliance that you've done with American? You could argue that would be a bargaining chip in this kind of a situation. Is that how you're seeing it?
If you look at what we've offered, Guy, in terms of gates and slots, we've already said at the Northeast airports that a combined JetBlue and Spirit won't be one gate or one flight bigger than we were before. Right. We've offered all of Spirit's gates and slots, all of the Northeast airports, so that a new ultra-low-cost carrier can come in and compete and really make sure the status quo remains.
I'm not sure that was a yes or a no. So if you had to pick, which one would you pick?
We're not going to pick. We can do both. And the Northeast is about making JetBlue bigger in the Northeast. The Spirit transaction is about growing a bigger JetBlue outside of the Northeast. Look, you've got 4 large airlines in the US with 20% share. Right? For us truly to make sure this industry stays competitive, we have to, as a smaller airline, find innovative ways to grow and help keep low fares and give customers choice. A bigger JetBlue, powered by both the NEA and the Spirit transaction, really can be a game changer.
Is this, if you don't do this, then what?
If we don't do this, we have an organic plan. This is speeding up our organic plan by about 7 or 8 years. And so if it doesn't happen, we'll end up doing most of the same things. It's just going to take us a lot longer.
London, how's it going? we've seen significant problems at UK airports as well. I imagine that's an issue for you. You've also got aircraft delays, which is affecting the Boston routing.
Yeah.
How quickly can you recover all of that? How quickly can you get the North Atlantic kind of to where you want it to be?
Well, I've got great news on London today, Guy. This may be breaking news right here, but you know, we've now got access to a second permanent Heathrow slot, and we're also announcing additional flight to Gatwick today from New York. So that means as we kind of come into 2023, we'll be offering 3 flights to New York, 2 to Gatwick and 1 to Heathrow, and 2 flights from Boston, 1 from Gatwick and 1 from Heathrow.
Final question, just to kind of wrap it up, really. Consumers continue to take this level of prices. Just kind of the economics of the industry, are we getting to the point now where we are going to see demand destruction? I just hear anecdotally, problems at airports, high prices. Do I want to fly? How do you answer that question?
Well, I think we're in a very unique time this summer because I've never seen an environment where fuel is incredibly high. There's a lot of demand. And there are capacity constraints in the system. So I think it is an immensely challenging time. I think all of us have to appreciate that and do what we can to take the stress out of the system for our customers. But I do believe as we get through the summer and as we get into 2023, it will become much more what we were used to before the COVID pandemic.
I think. Robin, great to catch up. Always a pleasure. Thank you very much indeed for sharing some of your time today. Robin Hayes, CEO of JetBlue. Anna, back to you.
Thanks very much. Guy Johnson there on the ground in Doha at the IATA conference, talking to many voices, really interesting conversations from the world of aviation. And Robin Hayes of JetBlue clearly optimistic about his European plans there and London in particular, of course. Now, coming up, Bitcoin struggling to hold above the $20,000 mark. We will get more on the crypto market next. This is Bloomberg.
I think what we've seen during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
Keeping you up to date with news from around the world, here is the first word. I'm Laura Wright. President Volodymyr Zelensky says Ukraine is facing a historic week as EU member states are asked to sign off on its bid for candidacy status to join the bloc. Meanwhile, as grain harvests get underway, the war-torn nation is warning output may shrink by more than 40% this year because of Russia's invasion. President Emmanuel Macron's centrist alliance has lost its outright majority in the French parliament. Macron's group won 245 seats, short of the 289 needed for an absolute majority. A left-wing alliance will be the second biggest bloc, with the far-right National Rally in third, claiming 89 seats. The result means Macron will struggle to pass legislation, putting much of his economic agenda in peril. The UK is bracing for a week of travel disruption after efforts to avert a planned rail strike failed. Trains will be disrupted in 3 days of walkouts starting tomorrow as 40,000 staff hold the country's biggest train strike in more than 30 years. Separately, Londoners will be hit by a walkout on the city's underground network in another Labour dispute. The German government is to step up efforts to bolster gas storage levels after Russia reduced flows to the country. A state-owned lender will make available additional credit lines to guarantee gas injections. More coal plants will also be fired up to reduce natural gas use ahead of the winter months. China is sending teams to central and eastern parts of the country as soaring heat and a lack of rainfall threaten to hamper summer planting of corn and soybeans. Temperatures as high as 40 degrees Celsius in Henan, Hebei and Shandong provinces are drying up soil, making sowing difficult. This comes after many Chinese farmers reaped a bumper harvest of winter wheat. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Laura Wright. This is Bloomberg Anna.
Thanks very much for that, Laura, with your first word news there. And this is a special edition, of course, of Bloomberg Markets because it's a public holiday over in the United States. I'm Anna Edwards, live from London. Matt Miller and Kaylee Lyons both off today. But we've got European equity markets in action, up by just 1/8%, though. Tepid risk appetite this morning. So the Stock 600 makes modest gains. Natural gas prices still very elevated, linked to what we were hearing there from Laura. The flow of gas from Russia still only 40% of what it would normally be at this time of the year, and that is having a positive impact on natural gas prices, although raising big concerns about what happens into the winter. Iron ore prices weighed down by concerns about growth in China. Bitcoin around that 20,000 mark. Let us get to that Bitcoin conversation now. Bitcoin has struggled to hold above that closely watched $20,000 level. MicroStrategy chairman and CEO Michael Saylor spoke to Bloomberg's Emily Chang on Friday about his view on Bitcoin.
The bottom line is the Bitcoin strategy is 10x better than any other alternative. And so now I don't regret it. We've got $2.8 billion worth of Bitcoin on our balance sheet right now. And we feel like we're positioned well for when the markets turn around. And our only other choice would be to give all the capital back to the shareholders, in which case we would have nothing. And we would be struggling to get by without any assets.
Michael Saylor there of MicroStrategy. Let's get more from Bloomberg's Emily Nicole. Well, he's clearly a Bitcoin bull, Emily. Holds a lot of the stuff, obviously. Let me ask you about what you made of the weekend price action. I mean, such volatility, dropping nearly 15% during Saturday's session.
Yeah, you're totally right. Bitcoin did drop a lot on Saturday, and it dropped below that key $20,000 mark. I think traders were on watch for that for most of last week as it struggled to stay above it. And then it slid quite quickly below that point on Saturday before regaining the position again yesterday, and now is hovering around the $20,000 mark. I think it's actually in the green for the session currently, but it's been in the red most of this morning. So Bitcoin is definitely staying volatile.
Yeah, staying volatile. And what's the latest news flow surrounding Bitcoin, Emily, that sort of adds to our understanding about where the trouble spots are? Because every week seems to bring another name, another part of the crypto sphere that has got itself into trouble.
Yeah, so today we're looking at Solend, which is a crypto lender based on the Solana blockchain. While that's obviously a different crypto token to Bitcoin, these things are all interlinked. Crypto traders will post collateral in a wide variety of assets for these kinds of loans, so Bitcoin is no exception there. What happened overnight is that a large crypto wallet with that lender looked at risk of liquidation, and the users of the community of Solend voted to take control of that wallet so that they could liquidate those assets in a way that might affect the blockchain less. That proposal was actually reversed a few minutes ago, so there's a lot of chaos happening over there as well. But it definitely shows, at least in the crypto community, how people are split as to how to handle this crisis right now.
Yeah, so a lot of different views and things moving fast. Emily, what is at stake here? Because for a lot of people, the level of volatility we've seen, the fast drops in the Bitcoin price, really raise concerns about not just where we head in the short term, but the long term, case. If you previously saw a bull case in Bitcoin, is your resolve being shaken by the extent of the selling here?
For sure, yeah. I mean, obviously, over the last year, all we've heard is that Bitcoin is a hedge against inflation. That's one of the main arguments for buying it. And obviously, in this climate right now, with interest rate hikes happening, Bitcoin is proving that it's no different than any of the other assets that we trade in traditional stock markets. Its correlation with technology stocks, for example, is extremely high. And what we've been seeing over the last few days is that the point of that $20,000 level was because if Bitcoin slid below that, it meant that if you had bought Bitcoin, say, 4 years ago when the last halving happened on the network, you now have not made any more money than you had back then, which is usually a big psychological point for traders. They want to look ahead to the long-term case of Bitcoin and hold that money. And so not being able to do that anymore, it's shaking confidence in the asset's longevity. And especially in crypto markets itself, that's really all that you ever hear anybody say, right? Buy Bitcoin and hold. So where we go from here is pretty unknown territory.
Yeah, hold, or you might spell it differently, but still hold.
Yes.
Emily, thanks very much. Emily Nicole with the latest on crypto. Thank you very much for joining us. Now, coming up, it's been 2 years since the death of George Floyd. We will hear from the attorney who represented his family in the wrongful death lawsuit against the city of Minneapolis. This Juneteenth, we bring you that conversation. This is Bloomberg.
Energy prices and a short supply of key chemicals that produce synthetic fertilisers are sending pig, cow and horse manure prices soaring. Even human waste is in demand as farmers hunt for alternatives. Fertiliser helps increase crop yields.
You can see how much moisture is held into this. It's a lot of organic material into the compost, so it breaks down. The manure and the straw breaks down into a friable mix that can be mixed into your soil in the ground and for growing a whole range of different vegetables. Holds the nutrients in, holds the water in, and it really increases the kind of biodynamic profile of the soil.
The recent price spike could mean more farmers going organic for the long term.
Lots happening on Wall Street.
It's the basic law of economics.
It validated what the market was already pricing.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management.
It's a challenging dynamic.
We could continue to see that kind of strength.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
Welcome back to this special edition of Bloomberg Markets. I'm Anna Edwards. Quick look at the markets then. Modest gains being made for European equity markets. The French market underperforms a little bit. Politics very much to the fore there. Now, Netflix has a new documentary called Civil about Ben Crump, known as Black America's Attorney General. He represented the family of George Floyd in civil court and won $27 million against the city of Minneapolis in a wrongful death suit. Bloomberg spoke to Ben Crump and the documentary's director, Nadia Halgren.
When we started making this film, it's a question we asked ourselves. We knew that we would be with Ben for quite some time and really wanted to explore that. You know, everything that we filmed was post George Floyd's murder. So you see the killing of Daunte Wright happen in the film during the trial of Derek Chauvin. You see the killing of Fred Cox. You see the killing of Andre Hill. So while people were very quick to rush and say things have changed now, you know, George Floyd was murdered and people care and they're taking to the streets, I'll give my personal opinion based on what I experienced working with Attorney Crump, was that not a whole lot had changed since then in terms of police excessive force murders.
I'm probably a little more optimistic. I see the glasses half full because I see how much the consciousness level in America has been raised, consciousness level in the world since George Floyd, that when people are starting to believe, Black people now, when we say they brutalize us, before they didn't really believe it. They thought we were just exaggerating. But when you watch that documentary of George Floyd being tortured to death, you can't unsee it. And so I think we are making significant progress. It is incremental progress, but it's progress all the same. The fact that, you know, you had President Biden sign the executive order. You had over 100 to 150 cities and states pass laws to say, we're not going to allow police to use the chokehold, because it was legal in most cities in America up until George Floyd. And they were only using it against Black and brown people. In the state of Minnesota, over 85% of the times when they used the chokehold, it was against a Black person or a Hispanic person. And here's the catch. Black people only make up about 10% of the population in the state of Minnesota. So you weren't choking our white brothers and sisters, but you were choking Black people. So we're making change. The last thing I'll say on that is I try to be a student of history, and I go back and I look at the Civil Rights Act of 1964 and the Voting Rights Act of 1965. They did a study after those laws passed, and in 1966, the electric in America was the same. You know, all the same people had been elected, nothing had changed. Then they did a study 10 years later, and the Voting Rights Act of 65 had a profound impact on who was getting elected. For the first time, you were seeing Black mayors being elected. For the first time, you had 10 times as many Black congressmen in the United States Congress. So I believe we are going to continue to make a better world for our children.
That was attorney Ben Crump and Nadia Halgren, director of Civil. This is Bloomberg.
companies now, they're getting hundreds, maybe even thousands of applications. So software has come in to automate the process.
You want to write your resume for robots, not for humans. The only job your resume has is to be comprehensible to the software that is reading it, because that software or robot is going to decide whether or not a human ever gets their eyes on it.
These things are programmed by a certain segment of the population that might not be totally inclusive or not be fully aware.
Concerns about how this technology could exacerbate discrimination. For the FTC, I think foremost, the FTC needs to be making sure that we're fully understanding this technology.
We don't trust companies to self-regulate when it comes to pollution. We don't trust them to self-regulate when it comes to workplace comp. Why on earth would we trust them to self-regulate AI?
Front Row, exclusive interviews with the most influential figures in finance. Lloyd Blankfein.
Deflation is a terrible thing. Inflation you could tolerate.
Kathy Wood.
Tesla will be in the pole position to dominate.
Jeremy Grantham.
We've had a very, very abnormal honeymoon Goldilocks period.
First available on the Bloomberg Terminal, then on Bloomberg Television and Bloomberg.com. Front Row, the best seats in the house for business's greatest minds.
Good morning. Welcome to a special edition of Bloomberg Markets. I'm Anna Edwards. It is 11 o'clock here in London, 6 a.m. in New York, and 6 p.m. in Hong Kong. Our top stories revolve around the markets. Let's get a look at what's going on these markets for you then. We've got European equity markets, of course, trading up by 0.3%. We don't have US equities trading. We don't have cash treasury trading either, because it is a public holiday over in the United States for Juneteenth. But here in Europe, we do see a little bit of risk appetite with stocks moving a little higher. Underperformance, though, on French markets as a result of some French politics. Natural gas prices go higher because of concern about Russian supply and the extent to which Russia will be prepared to supply that gas. Iron ore prices are weaker. Concern around China and Chinese growth dynamics very much to the fore when it comes to these commodities. Bitcoin, we spoke about this last hour, 20,627 after it dropped below the 20,000 mark over the weekend. A lot of volatility coming through on cryptocurrencies, Bitcoin and elsewhere. That's a quick look at these markets. Let's get an up-to-date picture of global news flow. Here with the First Word News Update is Alice Atkins.
Hi, Anna. Ukrainian President Volodymyr Zelensky says his nation is facing a, quote, historic week as the European Union's 27 member states decide whether to approve its bid to become a candidate. While the French, Italian and German leaders have already given their blessing, all member states must agree. They'll reach a decision later this week. President Emmanuel Macron's centrist alliance has lost its outright majority in the French parliament. Macron's group won 245 seats, short of the 289 needed for an absolute majority. A left-wing alliance will be the second biggest bloc, with the far-right National Rally in third, claiming 89 seats. The result means Macron will struggle to pass legislation, putting much of his economic agenda in peril. China's spring outbreak of COVID-19 continues to subside, but a single local case in Shenzhen detected over the weekend triggered mass testing and neighborhood lockdowns. Nationwide, China is reporting the lowest number of new cases since early February. But the country continues to pursue a zero-tolerance strategy that's left it isolated from the rest of the world. After 2 years of pain brought on by COVID, the airline industry should return to profitable times next year, as pent-up demand for travel sustains bookings. That's a prediction of the International Air Transport Association. At its annual general meeting in Doha today, the IATA said airlines have emerged, quote, leaner, tougher and nimble, having defied predictions for widespread bankruptcies and failures. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts more than 120 countries. I'm Alice Atkins. This is Bloomberg. Anna?
Alice, thanks very much. Alice Atkins with your First Word News update. Let's bring into the conversation Sebastian Galli, Nordea Asset Management Senior Macro Strategist. Sebastian, nice to speak to you today. Thank you very much for joining us. So let's start with the big picture and expectations for recession or otherwise. We saw Janet Yellen saying there's no certainty that we'll see a US recession. Nomura, I know, now stepping towards calling a recession in the fourth quarter of this year. How likely do you think a US recession is then, Sebastian, at this point, and over what time horizon?
The entire debate falls down to, can I forecast a recession? And when you have nonlinear events, rare events, when you have small group becoming big groups, such as a unionization process, these are processes that we don't understand very well. We have very little data to back us up from the 80s and the 70s. The entire structure of the economy has changed from there, and therefore our ability to forecast a recession in reality is very low. All you can do is trust somebody to tell you something that they believe in, and some of them have better forecasting capabilities, such as the U.S. Treasury, which has a fantastic staff behind it. When Nomura tells you something like this, a recession is coming, it is simply a bet. It also indicates where they think the flow is going to go from a fixed income point of view, and the same with Deutsche Bank, which is pushing a very aggressive bearish bet on recession for a while. They don't know more than we do. All they know is that this equilibrium is what we call unstable. It doesn't take a lot to change it, both from the bad side and the good side. So Janet Yellen comes in and tries to reassure the market. It should have a positive effect. If the chairman of Goldman Sachs, the JP Morgan, are afraid of turbulence ahead and maybe a recession, it affects CEOs, it affects households. They have tremendous amount of credibility. The answer is we don't really know. The odds of recession certainly have increased because our expectations are starting to shift. We're seeing that through CEOs in the United States. We should see that increasingly through households because their savings are declining. Their ability to borrow also is limited.
Yeah. So what are you watching crucially then, Sebastian, to give you clues as to whether we do head towards recession? I spoke to a guest earlier who was putting a lot of emphasis on the stock of savings that US consumers and the strength of balance sheets and cash positions at US companies, and was saying that those were crucial to watch because once they had unwound to, you know, pre-COVID levels, then we would be in a more dangerous position.
I think that's certainly right. And the point which has been made by the chief economist of Goldman Sachs that there's more home equities being pulled, more borrowing on credit cards is also an indication that goes much more than savings. It really goes into net savings. People are leveraging and they're hoping for the best, that this is a temporary effect and that the central bank will manage it, that the government will manage it. And as every month go by, we don't really know. It makes one of the odds much more probable. And I think we just have to wait for it. Our CEOs in the United States suddenly going to be very depressed because they're more leaning Democrat than Republicans. The government is more of a Democratic lean. It's a lot of things can happen which are uncertain. It's more likely we have a slow growth, relatively high inflation, moderating eventually quite fast. We probably will avoid a recession. Do you believe me? You shouldn't, because we don't have the data to back out the answer.
Okay, yeah, so to your own point then, Sebastian, everybody's just sort of taking a view, aren't they? I mean, what do you think, what are assets telling you though, Sebastian, at this point? What are equities telling you? Are equities telling you they've priced in any kind of recession? Or are you looking for clues such as that?
JP Morgan makes a claim that there's an 85% probability of a recession priced into US equities. If you look at the valuation, it just doesn't work. It's the type of models that they use, which assume normal paths, things which are very smooth. The reality is they're too elevated if you want the stock, and the price have to adjust. And we can't say that US equities in general are cheap. Some of them are. You can think, for example, of the likes of Coca-Cola, and some of them are very attractive, but part of the tech, part of the quality remains very expensive, and this process of adjustment lower hasn't yet happened. And that depends, of course, on the odds of a recession, if people really believe that it's coming or not. So it's still touch and go in the US equity market, and some of it is quite rational, and some of it is still somewhat irrational, but far less than it used to be.
I mean, on that point, do we see enough irrational behavior, Sebastian, to call the bottom, to say we've capitulated, we've seen the bottom on stocks?
So what you do when you look at the bottom of stocks, you look at valuations, you look at momentum, look at what we call cross-asset correlation, how things move together. You look at positionings, you look at sentiment, you go to Twitter, you go in many different directions to have a sense. And of course, if you're working with a bank, your big hedge funds, your big asset managers, then you get privileged access to what's happening from a flow point of view, other CTAs and the likes, and it creates an entire picture from which you can say, okay, it is time to buy. And all we can say is we're getting closer to these levels, but it hasn't happened yet because the odds of a recessions are not yet clear enough. And once it materializes either on the downside or on the positive side, then we will have massive amount of clarity. We saw that example, for example, on the Italian curve last week, where we see a massive rally on the back of hope. And this is really the digital world in which we're operating. Things could go much worse or much better. And the odds are, for now, they're priced for worse. And it probably will be a bit better than you expect.
Sebastian, what do you see in commodities at this point that's helpful? We seem to see quite large moves on the back of just seemingly incremental news flow. So 7% down on oil prices during Friday's session. Something similar to that, weakness in iron ore in today's session. And yes, there's concerns around Chinese growth, but we've been concerned about Chinese growth in the property sector for some time. What do you see in commodities?
Well, all it tells you is that the winning strategy for a long time has to be long commodities. And because you're so leveraged and there's been so much momentum, it doesn't take much to get a corrections. Natural gas prices are actually up. And on the other side, oil prices are down. But it also tells you that the supply curve is very inelastic, what we call. So it doesn't take much for prices to increase or decrease a lot because there's too much demand for now. It hasn't slowed down yet enough. When it does, then we're going to get big prices adjustment. We're very far from it. And it just tells you that the supply is just not keeping up for oil prices. It doesn't tell you much. Tomorrow, oil prices could be up another 7%.
In terms of our expectations, Sebastian, do you think the market understands that we might see rationing of gas as we go into the winter months in Europe? Is that what is priced in? I mean, neither of us has a crystal ball to say whether that will happen, but is that the market's assumption? Or if we saw that coming to pass, would that come as a nasty surprise?
Well, it's the value of reading a Bloomberg article where they actually went through the entire logic and basically showed us how natural gas has to build up in terms of reserve in Europe with basically the bandwidth going through and how far we are. So clearly, we're not going to build up these natural gas supplies fast enough in Europe. Clearly, there's a war, proxy war between Russia and NATO. And that means in the coming month, we will be faced with rationing. Is it priced in? Probably not. Fertilizer companies, others companies will have difficulties simply being able to produce. It's a shock for Europe. Why do they want to see this shock? They want to see this shock because they want to see recession both in the US and in Europe. And all these people getting excited about a price of recession, but that is a Russian take on it because in a recession, people are more focused on themselves. It becomes much more difficult to help the Ukrainians because it is very expensive and people are just concerned about their own future.
If you're looking for places to protect yourself from inflation, Sebastian, then where do you hide out? I know listed infrastructure and real estate for some people has been a place to go, although with interest rates on the rise, real estate may be troubled. I know that commodities trades are fairly crowded by some people's description. So where do you hide?
Well, there's some stuff which is specific to Nordic countries and others called covered bonds. It's used in Canada, it's used in the US, it's used in Europe. If you look short duration covered bond type of positions, they can actually be quite attractive because it's about knowing the market, which is a very specialized market, but a very interesting one. And of course, companies like Coca-Cola, Air Liquide, which combine cheap valuations with quality. That means they're able to generate a steady cash flow and they have a record of it and they probably should continue to do quite decently. They remain as an attractive hedge, not a perfect hedge. It's still a low beta exposure, as you would call it, but it is still very interesting.
Sebastian, thanks so much. Thanks for joining us. Sebastian Galli, Nordea Asset Management Senior Macro Strategist with the things that we do and don't know at this point. Let's have a quick check of the markets then for you. And stocks here in Europe up by 0.5%, as we've been saying all morning, a little bit of underperformance on the French market. And actually elsewhere, we continue to see better performance for European stocks. So the IBEX over in Spain up by 1.1%, the FTSE 100 up by 0.9%. We're seeing some gains earnings for some of the financial services names, some of the banking names in Europe, and that is having a positive impact on the FTSE, as are the gains that we've seen for some of the commodity-related stocks as well. So that's the broader picture. As you see, the CAC 40, though, a little bit of an underperformer. Italian 10-year yields, we put this in here, 3.56% right now. We're seeing some buying of the 10-year BTPs and those yields coming down a little bit. Our colleagues on the Markets Live blog, Ven Ram in particular, talking about how it's quite incredible the extent to which just some soothing words from the ECB, we saw this last week around fragmentation and the tools they have to fight that, how that has managed to kind of put a lid on BTPs and spreads between BTPs and bunds, and that seems to have done the trick in the short term. How long that lasts, we'll wait to find out. But fragmentation clearly still a talking point for European stocks, for European bonds, and indeed for the ECB conversation from here. We've been bringing you headlines coming through from the IATA conference. We will continue to do that. Coming up, we'll head back to the IATA general meeting. It's taking place over in Doha. We will bring you one of the key conversations that we had there this morning, an interview with the Airbus CEO, Guillaume Fauré. He was talking to our colleague Guy Johnson on the ground there in Doha. A lot going on in Doha and in Qatar more broadly this week, it seems. We'll bring you highlights of that conversation next. This is Bloomberg.
The Indian city of Jamnagar is a money-making machine for Asia's richest man, Mukesh Ambani. His company Reliance has the world's biggest oil refinery complex here in the city. Jamnagar is also where Ambani is making his newest bet, a $10 billion investment in green energy. His ambition is closely aligned with the Indian government's plan to reach net zero emissions by 2070. But Ambani is not alone. India's second richest man, Gautam Adani, has committed $20 billion of investment over the next decade. But India's massive dependencies on fossil fuels have some environmental advocates questioning the realism and sincerity of those green ambitions and those of its two biggest billionaires.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases, or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
This June, in honor of Pride Month and Juneteenth, Bloomberg brings you a special equality series every Thursday in June at 1 p.m. Eastern. Bloomberg Equality, celebrating inclusion this Pride Month and all year long.
Welcome back to this special edition of Bloomberg Markets. Just coming up to lunchtime here in London, here in the European session. And Europe is up and trading, of course, up by 0.4% on the Stocks Europe 600. It is a public holiday over in the United States, of course. So without that volume and that influence, for what it's worth, US futures are pointing higher at this hour. Natural gas prices go higher on geopolitics. Iron ore being weighed down by expectations or lack thereof of growth over in China. And Bitcoin back over 20,000, but struggling to keep its head above 20,000 after lots of volatility at the weekend. Now, Airbus is seeing record demand from airlines, according to the CEO, Guillaume Fauré. However, supply chains are still recovering from a 2-year shutdown. Bloomberg's Guy Johnson had that conversation with the Airbus CEO from Doha.
So when we look at the supply versus demand on the single aisle, on the one we're ramping up now, under most of the scenarios, demand will remain higher, stronger than supply.
Yep.
So it's a supply constrained environment for us on the single aisle. Well, we're ramping up back to rate 65 that we had just before COVID. So the production system is existing, but this has been idle for 2 years. So it's very difficult to get there, especially with the global situation on the marketplace. Yep. The supply chains are really disrupted. It's very difficult to ramp up at the pace we have defined to ourselves. In 2022, we want to ramp up by 20%.
Yep.
Okay? Then we'll go to rate 75. So I think demand will remain higher than supply. So it's a race on supply. We've defined a trajectory and we're working very hard to stick to that trajectory. If at a point in time we have to slow down, we'll face the reality, but we are not there. At the moment, we stick to our plans.
Where are the biggest concerns? So we're hearing that, for instance, you're currently experiencing issues with engine manufacturers. There is a suggestion that maybe aircraft are being built without engines being available. A, is that the case? And B, is that where the biggest problem is going to lie? The joke in the industry is sometimes, and I'm sure you don't share this joke, that you bolt an aeroplane onto an engine, not the other way around. I'm sure you do, but is that where the real kind of concern is going to lie? Is that marrying of engines and airframes?
Well, it's a consequence of other reasons. Engine makers are facing the same problems than we are facing, yep. And actually these are difficulties across the board. It's not the situation that we have one commodity that is a problem or yep. One region. We see across the globe the same problems on supply of microelectronic chips, small components, wires, connectors. We see shops that were closed for 1.5 years having difficulties to ramp up because you don't find the people, the skills in number and in skills, and that's across the board. So everybody, all OEMs have a lot of difficulties to get their suppliers deliver on time, and it's a very complex supply chain. That's what we see for engine makers. That's also what we see for Airbus. Now, it's the fact that we're missing engines, and that's at the moment one of the big bottlenecks. And yes, indeed, we are starting to build what we call gliders in 2018, meaning planes without engines. That's a situation I don't like. Yep. Engine makers are telling us they will recover in the second half of the year. That's why we take the risk to build planes without engines in limited numbers, with the perspective to get engines at a later stage and being able to serve our customers. Because again, the demand is very strong.
A couple of kind of related but unrelated questions. I couldn't help see you sitting next to Mr. Al-Bakr at dinner last night. You've obviously had your issues with Qatar recently. Any sign of détente?
It's a complex matter. I don't like to be in that situation with one of my main customers. So we're working hard to try to resolve, but it's not an easy situation to manage. So I want to remain optimistic and think we'll find a way forward. And as you've seen, indeed, the relationship is good between the persons. So the organizations need to find a solution.
You are a CEO that has manufacturing bases across many jurisdictions, most of them in Europe. The politics of Europe seems to be getting more and more complicated. It just got more complicated overnight with the parliamentary elections in France that we've seen the results for. It looks like Mr. Macron is not going to have a majority. Does that make your life more complicated? How are you thinking about the politics of France right now and the politics of Europe?
Well, I won't comment too much on France because, as we just discussed before this interview, I have not had time to look at the detailed results and I don't yet understand fully what the consequences will be. But yes, the landscape in Europe is very complex. Europe is complex per se, but we see complex situations in countries, in major countries of Europe. That doesn't make our life easier.
That was the Airbus CEO, Guillaume Fauré, at the IATA General Meeting in Doha, talking about the way ahead for aviation. So interesting conversation there coming through from our colleague Guy Johnson. Let's have a look at what's going on these markets then for you. And we have European equity markets making some modest gains today, or up around 0.5%. We are without the US. It is a public holiday over in the US for Juneteenth. And so as a result, European equity markets possibly finding it a little heavier going, or maybe without some of the volumes that we would normally attract. But the Stocks Europe 600 up by 0.5%. The FTSE 100 is up by nearly 1%. The IBEX in Spain up by just over 1%. So we do have some decent gains coming through in some markets. The CAC 40 a little bit of a underperformer. And we heard Guy and Guillaume just talking about the results of the French election. President Emmanuel Macron failing to hold on to his outright majority in the parliament in France. So will that make it a little bit more difficult for him to get his legislative agenda through? That's the conclusion of of many investors watching the early results of that election, and the CAC 40 trading not weaker, but trading under the performance of other markets as a result. More broadly, the European equity market picture shows some strength in the banking sector and strength in energy markets, and both of those sectors, of course, play very well for the London market. So we see a little bit of outperformance there. Perhaps the German market up by 0.4%. So energy stocks moving higher, despite the fact that we've seen a big drop in oil prices, and we see Brent prices at 112 is the handle, down by 0.4%, dropping 7% during Friday's session. Despite that, we still see some of those energy names moving a little bit higher this morning. More broadly, the commodities picture looks like this. So stocks moving higher, but natural gas prices also moving higher. This is not a demand story, though. This is all about supply. This is about the supply from Russia. Last week, we saw these natural gas prices, and this is the benchmark for Europe, at their highest level, making the highest gains than in any week we've seen since the Russian invasion of Ukraine. So there's a lot at stake here. This is a fast-moving political story. Gazprom, the Russian supplier, gradually dialing down the amount of gas that is available to European consumers. Currently, the Nord Stream pipeline, last week and today, running at 40% of its normal flow. And this is something that policymakers in Europe are incredibly aware of, and has led to lots of conversations about whether we will have to see any rationing of gas use as we go into the summer. Many policymakers want that to be limited to businesses and not, of course, affect consumers. We will see whether they manage to maintain that stance as we get towards the winter. Bitcoin, of course, on a wild ride today, as well as we see monetary policy adjusting to try to tackle that higher inflation picture. And coming up, thinking about higher inflation, Treasury Secretary Janet Yellen says higher inflation will remain for the rest of the year, while the Fed's Christopher Waller says he would back another 75 basis point hike from the Fed. We'll talk policy next. This is Bloomberg.
When you think of cutting-edge technology at sea, you might be thinking of stuff like this. But there's an incoming revolution on the high seas that isn't quite as sexy, but could be significantly more impactful.
Container shipping is the key component of global trade. About 80 or 90% of all the world's goods are transported at sea at some point.
But there's a significant unseen cost to the modern era of global commerce.
About 3% of all the world's CO2 emissions come from shipping.
3% may not sound like a lot, but that's roughly comparable to the entire CO2 output of Germany. Since reducing trade isn't a likely option, what about a technological improvement to help reduce the emissions from these well-stocked maritime behemoths?
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
In crypto, you have a world of young people that want their own financial system and their own culture. And it is very powerful, and I'm a big believer in it.
Welcome back to Bloomberg, a special edition, of course, of Bloomberg Markets because of the public holiday in the United States. I'm Anna Edwards, live in London. European equity markets are trading today, even if we are without the volume and the involvement of US players. Now let's get an up-to-date picture of global news flow. Here with the First Word News Update is Alice Atkins.
Hi, Anna. EU Foreign Policy Chief Josep Borrell slammed Russia's disruption of Ukrainian grain exports today as, quote, a real war crime. Speaking to reporters ahead of an EU foreign ministers meeting in Luxembourg, he said it was the war and not EU sanctions that are causing prices to soar. Borrell said millions of tons of wheat remain blocked in Ukraine, while in the rest of the world, quote, people are suffering from hunger. In the Philippines, President-elect Ferdinand Marcos Jr. has appointed himself Agriculture Secretary. It's a rare move that gives him direct responsibility for food output as inflation pressure challenge his incoming administration. Marcos has pledged loans and modern machinery for agricultural workers to boost food supply and bring down prices. The last time an incoming leader assumed a concurrent role as minister was in 1998. The US economy will likely fall into a mild recession by the end of 2022 as the Federal Reserve raises rates to tame prices. That's according to the latest outlook from economists at Nomura Holdings. The company warns financial conditions will tighten further, consumer sentiment is souring, energy and food supply distortions have worsened, and the global growth outlook has deteriorated. The European Central Bank is ready to combat unwarranted financial market moves, but must also be prepared to look through turbulence as it exits negative interest rates. Speaking after an emergency meeting in Riga, ECB Governing Council member Martins Kazaks said it's natural to see some increased uncertainty and volatility, and that the bank needs to act with a, quote, cool head and steady hand. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Alice Atkins. This is Bloomberg. Anna?
Thanks very much, Alice. Now, divergence among global central banks, that's certainly one big theme. The Federal Reserve, the Bank of England and the Swiss National Bank all raised rates last week, while the Bank of Japan held steady, and the ECB held an emergency meeting to aim to prevent euro fragmentation.
The committee decided that a larger increase in the target range was warranted at today's meeting.
We believe it was necessary to increase rates today. If you look at our inflation forecast, it clearly shows that inflation is now higher.
If we do see greater evidence that the current high level of inflation is becoming embedded in pricing behavior by firms, in wage setting behavior by firms and workers, then that will be the trigger.
The calibration of this rate increase will depend on the updated medium-term inflation outlook.
If we raise the yield ceiling in the current circumstances, we'd expect to see long-term yields rise above 0.25%, and that would weaken the effect of monetary easing. So we're not planning on doing anything like that.
By the end of the year, I expect inflation to get to 7%. That's a very high number, and we need to be able to chart a course back to 2 to 3% inflation.
Either a 50 basis point or a 75 basis point increase seems most likely at our next meeting.
If the medium-term inflation outlook persists or deteriorates, a larger increment will be appropriate at our September meeting.
Joining us now is Sandra Flippen, who is ABN AMRO's chief economist. Sandra, very nice to have you with us. Thanks for joining us. If I could start with a look at the US economy, how far through the tightening cycle do you think the US is? And of course, we all pore over the details of the latest inflation data every time it drops. But what else are you looking at to see how much room there will be for the Fed to tighten before they've managed to bring demand down sufficiently to match supply?
Yeah, well, hi, thanks, Anna. I think the Federal Reserve is definitely taking the steps that are needed to bring down inflation, and this is not the end of it. So we think that the 75 basis point steps that were just taken will be followed by another 75 in July, and then a gradual lower hiking steps. Until the fund rate goes to about 4% around February 2023. And I think the reasons for that are quite clear. So inflation keeps surprising to the upside. Long-term inflation expectations by consumers keep surprising on the upside. Also, wage growth, I mean, it's not as high as a short while ago, but it's still very, very high. And so that is driving more medium-term inflation. And the other thing is that the current hikes seem to be more and more priced into markets, although we think that even more might be coming down the pipeline.
Okay, and so how certain or otherwise are you, Sandra, that we see some kind of recession in the United States? And if we do see one, when will it be and how deep? I spoke to a guest earlier on who said that, you know, nobody knows and we're all just taking a view. But what is your view?
Well, I would definitely agree to that statement. Nobody knows and we're just taking a view. Our base case is that is not a recession yet for the US, but risks of recession are super high. That said, we look at the Fed Commission's projections on the macroeconomy and compare that to our own. And what we see there is that the Fed expects unemployment to go up in over the course of 2023, and also growth to come down. We think that is a bit understated. So we think unemployment will go up stronger and growth will go down stronger. Can't say exactly by how much, but at least stronger than the Commission is now projecting themselves. And this means that we think that over the second half of 2023, there will be also quite a lot of room for looser monetary policy by the Fed again. We think maybe even some 100 basis points loosening, so towards the end of 2023, in order to indeed deal with potential recession in that period.
Okay, and let me move to Europe, Sandra, because we continue to monitor the extent to which Russia is willing, or Gazprom is willing, to send gas to Europe. And I know that this is something that you've been looking at in your research. What assumptions do you think people are making about how much gas will be available, whether gas rationing will have to take place in Europe? I mean, do we need to wake up to a risk that has not been priced in yet?
Definitely. So I think we need to wake up to a risk that is not priced in yet. There is a fierce debate going on in Europe on what the economic impact would be from a full gas stoppage from Russian side. The debate is basically around two groups of economists. One group is, and basically the debate focuses on what would happen to the German economy, but the lessons from that can be taken Europe-wide. So the discussions basically, on the one hand, economists saying that the German economy would, from a full gas stoppage, shrink by 0.5% to 3%. The other group is saying it would be more in the line of 3 to 7%. And it's very interesting to look at the differences between the two studies that try to model the economic impact. And key differences are the question, to what extent do you assume that other economies are basically sourcing the globe for alternatives as well, which would, of course, increase prices enormously and therefore lower your growth prospects enormously. And the other thing is that what are your so what kind of strategic moves can economies take while waiting for this stoppage to occur? And in this respect, I think very interesting is the recent news by the German Minister Habeck, who has decided to basically very quickly wind down the usage of gas for electricity generation and start reusing coal-fired power plants to the maximum in order to keep those gas storages filled for the coming winter. I think it's a very sad piece of news for the energy transition, but also a very sensible one, because energy security is really at stake here, and that's also going to affect the economy in Germany, but also in the rest of the Eurozone to a huge extent.
And how does that fall in with the Repower EU projects and investment that we see in Europe, Sandra?
Yeah, so actually that's a very complicated question, because we are, I think, approaching a little bit of a perfect storm slowly, because we have the strategic autonomy agenda vis-a-vis Russian gas. We also have our energy transition ambitions, and those are not, that is not a voluntary exercise. That is actually an exercise that is increasingly backed up by litigation cases in court, which are basically forcing governments to do the orderly net zero transition, and that's going to bite in an extreme way with the current situation in the war. So the way this will pan out is really insecure. I think the probability that coal-fired power plants or even nuclear power plants will be all alternatives will have to be used in order to prevent our energy security to become the victim is very, very likely.
Okay, so that's one of the headwinds that certainly faces the European economy, Sandra. Also in focus at the ECB is the risk of fragmentation, so the risk that peripheral spreads essentially blow out. Do you think that the ECB will be able to get on with tightening central bank policy, tightening interest rate policy in the way that it wants to, and will be able to use other methods then, these other tools to fix the fragmentation concerns, or will fragmentation stand in the way of tightening?
Well, that is actually the question. So what will the fragmentation instrument, even though it's so far just a signaling instrument, I think that's also really important to keep in mind. And it's really still questionable whether the ECB will be called to action to execute on that. So far, the signaling has already caused a little bit of the going back of the spreads so far. So yeah, let's see how this plays out. But the real question behind it is indeed, what will this mean for the normalization of monetary policy? Because in the end, whatever way you turn it, it is these are two policy instruments that don't easily go well together. So the fragmentation instrument is basically looking at the reinvestment of bonds into the peripheral Eurozone economies, Italy, Greece, but the level to which that can be done is limited. And if you want to make that more effective, that will mean limits to your policy normalization. And that's the difficult balance act that the ECB is facing.
Okay, Sandra, thank you so much for joining us. Good to speak to you. Sandra Flippen, ABN AMRO's chief economist. Thanks for spending his time with us here on Bloomberg TV. Coming up on this program, the dollar falling as risk assets stabilize. We will dive into the current markets with Jeremy Stretch from CIBC. This is Bloomberg.
When you think space, you probably think one space agency that travels under the radar is ESA, which is surprising considering what the European Space Agency has achieved and how vital it is to the global space industry.
We've collaborated with pretty much everybody who is involved in space exploration.
But ESA wants to be a leading force in furthering humanity's mission into space.
Commander Ground, do you copy? Copy.
If we want to have successful human missions to Mars, we are going to have to learn to live and work off-world in a different way. The place where we are going to learn to do that is on the moon.
Can ESA help humanity take its next giant leap?
A lot's happening on Wall Street.
It's the basic law of economics.
It validated what the market was already pricing.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insight.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management.
It's a challenging dynamic. We could continue to see that kind of strength.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
Isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Welcome back to this special edition of Bloomberg Markets. US markets are closed today, of course, for the Juneteenth public holiday. And European equity markets, though, are trading. Asia was trading, of course, before that as well. Let's just quickly update you on where we are on the European story then. The Stock 600 up by 0.6%. The FTSE 100 up 1%. The IBEX in Spain up by 1.2%. We see banks and energy names moving higher. The CAC 40 underperforms. It's up by 0.2%, but not making some of the strong gains that we're seeing elsewhere. A little bit of the politics of France playing in there. Natural gas prices are being boosted by geopolitical tension, of course, and fears about growth weighing on iron ore prices. Iron ore down by 7.8%. Bitcoin has had a really volatile ride over the weekend and continues to do so, although managing to eke out more gains above that 20,000 mark right now. And I mentioned iron ore and concerns around Chinese growth, so let's get to that story. Chinese real estate developers rallied by the most in more than 2 months. This comes as investors bet on further policy support to revive the nation's slumping market. Bloomberg's Enda Curran joins us now. Enda, good to speak to you. How much should we be excited by policies to assist property building in China? Is that going to be a game changer?
There's no doubt there's going to be more support coming, Anna. So we did have some new developments today, actually. The banks in China, the biggest banks, declined or decided against bringing down their borrowing costs, their one-year lending rate, kind of a benchmark rate for companies. Now, this is interesting because it suggests that perhaps and obviously the banks take their cue off the central bank, of course. So it suggests that policymakers are in a bit of a wait-and-see mode at the moment. They want to see how their economy gets moving this month in particular, given that the worst of the Shanghai lockdown should have washed through by now. So there's that side of things. The policymakers already have brought down interest rates and, of course, put some money into the economy, especially for small and medium-sized businesses. So they want to see how that flows through as well. And the other point is the policy sector in China don't want to cut rates any lower because of that deepening divergence with the Fed. So when you take it all together, there's a feeling that There's a lot of money in the system right now as it stands, Anna, including for the real estate sector. They've brought down interest rates and they've taken other measures to help property developers there. So there's a little sense of perhaps we're at a wait-and-see mode when it comes to economic support right now. But the bigger picture remains, of course, the authorities are continuing to support the economy, and likely that more steps, one way or another, will be coming at some point.
But it sounds as if, from what you're saying, Enda, the steps are not monetary policy related, then. There are other things we should look for.
Oh, most certainly, Anna. So the issue in China is not about the price of credit or the volume of credit that's available for banks or households to loan. The issue is that the problems in China's economy are being caused, of course, by the ongoing, either the restrictions around containing COVID, the ongoing mass testing, for example, and the disruption with that, or, of course, the threat of an outright lockdown, the likes of which Shanghai saw for the best part of 2 months. And that, of course, caused all these problems, both for consumer confidence and manufacturing and logistics and the like. And the thinking is that bringing down interest rates isn't really going to offset those problems. That will either require direct government spending or direct government support, which is, of course, what the authorities are doing for the small and medium-sized business in particular, and lower interest rates aren't going to turn that around. The appetite for borrowing isn't there. The real estate sector, of course, does get some relief from lower interest rates, but there have already been cuts there. And as I say, the authorities have already taken other steps to stoke property demand as well. So when you add all of that up, the real focus is on what the government, the fiscal side of things, can do to turn the economy around, and what they can do in the COVID policy itself.
Yes, and on that front, Enda, is there any expectation of any change, any tweaks, any relaxation of the COVID zero policy, or no, not before these important meetings that take place in the autumn, in the fall?
It's hard to see it at the moment, Anna. So clearly Shanghai has pulled out of that very severe lockdown they had for the best part of 2 months, but there's still kind of ongoing rolling mass testing happening in Shanghai, in Beijing, in Shenzhen today, just beside Hong Kong here. There was another another mass testing exercise rolled out. All the indications are that the authorities are still sticking to that policy, and economists are warning that will have economic pain.
Okay, Enda, thanks so much. Bloomberg's Enda Curran. Now, we've been covering the aviation sector for you today. Earlier, Bloomberg spoke to the IATA CEO, Willie Walsh, and asked him if the post-pandemic summer boom is sustainable.
There's clearly pent-up demand that is being fulfilled at the moment. But all of the research we're doing, just reaffirms that people want to get back flying again. There are headwinds. I'm not going to, ignore the fact that we're facing some challenges. But actually, the outlook remains very, very positive.
So you're not worried about a recession? Jamie Dimon, CEO of the world's biggest bank, talks about an economic hurricane coming towards the United States.
Well, we've seen these before. You go back to 2008, 2009, 2010, global financial crisis, September 2008, the collapse of Lehman's. We didn't know what that would mean, but we saw a deep crisis in 2009. Interestingly, passenger numbers didn't decline, and then we saw strong growth in 2010. So, we can look at previous events. And I think one of the great things about this industry, because we have faced these crises before, we learn from them, we adapt, we apply the learnings, and we do better during the next time. So, I prefer to avoid these. I prefer if we didn't see these. But I think the industry knows what it needs to do in this environment.
Okay. Talking of learning lessons, there are significant problems in the industry right now. Huge demand, lack of supply. Particularly a lack of supply of staff. There are headwinds that are coming from lots of different directions, but this is certainly one of the major ones. When are these problems going to be fixed?
I think some of these problems are structural and will take a bit of time. So if you look at the US in relation to pilots, I don't think that's going to be resolved easily because of the regulations around the minimum hours required for commercial pilots in the US. So I think that plays into capacity being restricted in the US market, particularly in the US domestic market, for some time to come. And I think what's happening now is airlines are recognizing that they're not able to build up as fast as they had expected. So they're tapering their plans for growth. And that's why I think you'll see a more cautious industry. All of the headwinds that you're referring to will play into decision making. There's great excitement about the recovery, and obviously airlines want to take full advantage of the strong demand that exists. But I think we will see capacity being trimmed because of external factors, and therefore airlines won't be able to offer all of the capacity that they want.
Willie Walsh there, speaking to my colleague Guy Johnson at that IATA conference taking place in Doha. Really interesting conversations coming through on the aviation sector then. Obviously good times at the moment, a lot of excitement about the post-pandemic recovery. The extent to which it is sustainable, though, is a question. Also, the extent to which the aviation sector can make the most of the good times, given the external constraints that exist, not least of which availability of staff, availability of labour in some key industries, aviation itself, but also all the supporting infrastructure that goes along with that. Coming up on Bloomberg TV then, global central bank divergence has been emerging with the Fed and the SNB raising rates, but the BOJ standing pat. We will dive into the different paths ahead for the various central banks globally. Jennifer Keown of Capital Economics joins the Bloomberg TV team to take you through expectations for central bank tightening and otherwise. Stocks here in Europe up by 0.6%, a little bit of underperformance still over in France. This is Bloomberg.
Nuestro experimento, no hemos pintado todos los edificios de blanco, sino estos más asequibles de pintar. Y ya hemos detectado reducciones medias en el área metropolitana de 0,8 grados aproximadamente en un periodo de ola de calor y con picos máximos de 4 grados de disminución en un momento puntual del día, en una zona puntual del día. Y como dices, en una ciudad como Barcelona funciona incluso mejor que las zonas verdes, según las modificaciones nos detectan incrementos, o sea, disminuciones de temperaturas mayores con tejados blancos que con incrementos de zonas verdes como tienen planteados el plan director urbanístico.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
Front Row, exclusive interviews with the most influential figures in finance. Lloyd Blankfein.
Deflation is a terrible thing. Inflation you could tolerate.
Kathy Wood.
Tesla will be in the pole position to dominate.
Jeremy Grantham.
We've had a very, very abnormal honeymoon Goldilocks period.
First available on the Bloomberg Terminal, then on Bloomberg Television and Bloomberg.com. Front Row, the best seats in the house for business's greatest minds.
Welcome to a special edition of Bloomberg Markets. I'm Tom McKenzie in London. It is 7 a.m. in New York, 7 p.m. in Hong Kong. Let's check in on these markets. Of course, it is a national holiday stateside, Juneteenth. The futures in the US pointing to gains, though, when those markets do reopen on Tuesday, of around 0.7% on the S&P E-minis. Of course, the context being that you saw losses of almost 6% for the week last week in bear market territory as markets continue to reassess the risks of inflation, the risks of recession, alongside continued high inflation rates, and of course the pivoting of those central banks to more hawkish stances. When it comes to the breakdown across the indexes, here in the UK you're seeing gains of close to 1%. We continue to watch happening, of course, in terms of those spreads here in Europe as well. The Italian BTP is in focus, currently yields down by about 3 basis points. That will come as some comfort then for European officials after the European Central Bank discussed plans for an anti-fragmentation tool to address the concerns about weaker parts of the Eurozone. 356, a long way from the 4% handle you had on BTPs about a week ago that caused all that concern. And we continue to listen out for the ECB's Madame Lagarde later today. Brent is at 112, down 0.2%. Bitcoin, 20,840. It's been hovering around this 20,000 level. It crossed as low as 18,000, currently up 1% amid, of course, the volatility, concerns about higher rates, but also what's happening in terms of decentralized finance. We continue to keep across the crypto space for you. Right, let's get you a check then on news from around the world with First Word News and Alice Atkins. Alice.
Hi, Tom. Ukrainian President Volodymyr Zelensky says his nation is facing a, quote, historic week as the European Union's 27 member states decide whether to approve its bid to become a candidate. While the French, Italian and German leaders have already given their blessing, all member states must agree. They'll reach a decision later this week. President Emmanuel Macron's centrist alliance has lost its outright majority in the French parliament. Macron's group won 245 seats, well short of the 289 needed for an absolute majority. A left-wing alliance will be the second biggest bloc, with the far-right National Rally in third, claiming 89 seats. The result means Macron will struggle to pass legislation, putting much of its economic agenda in peril. China's spring outbreak of COVID-19 continues to subside, but a single local case in Shenzhen detected over the weekend triggered mass testing and neighborhood lockdowns. Nationwide, China is reporting the lowest number of new cases. Nationwide, China is reporting the lowest number of new cases since early February, but the country continues to pursue a zero-tolerance strategy that's left it isolated from the rest of the world. After 2 years of pain brought on by COVID, the airline industry should return to profitable times next year as pent-up demand for travel sustains bookings. That's a prediction of the International Air Transport Association at its annual general meeting in Doha today. The IATA said airlines have emerged, quote, leaner, tougher and nimbler, having defied predictions for widespread bankruptcies and failures. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Alice Atkins. This is Bloomberg. Tom?
Alice, thank you very much indeed. OK, we begin with the inflation angst that is facing central banks, particularly the Bank of England. More than 70% of UK consumers now expect the cost of living to increase over the next 12 months. And according to Bloomberg's latest MLive Pulse survey, a majority of investors fear the UK is stumbling towards recession. Here is how that could play out then for the pound.
When does cable go up?
It will at some point.
I don't think there's probably a great deal of enthusiasm in the markets for UK assets.
We've got the biggest tax grab in almost 70 years from the Johnson government. That's having a depressing effect on the economy.
Lower interest rates.
The mix between inflation and growth, the trade-off that they face, is worse than elsewhere.
So I think, you know, there is scope for it to be to a degree weaker.
I would throw in two candidates.
We need the dollar to turn around, and
an environment where value assets will strongly perform. I think that would be an opening for sterling. But right now, we don't expect either one.
Not this year.
Some people talk about parity, and that's probably a little extreme.
OK, joining us now to discuss is Jeremy Stretch, CIBC Head of G10 FX Strategy. Jeremy, thank you for joining us. We had, of course, that 25 basis point move from the Bank of England, as you well know. But the statement, the interpretation was that it was more hawkish than many had expected. The market's now pricing in, some within the markets at least, pricing in more than 25 basis points at the next meeting. You think that's overdoing it to some extent? What underscores that view, Jeremy?
Well, you're absolutely right. I do think that markets shouldn't be overplaying the degree of tightening risk coming through, because I think we should remember that the Bank of England have never actually hiked by, or the MPC under the auspices of the Bank of England has never hiked rates by more than 25 basis points. And of course, yes, that statement was a little more hawkish. They talked about acting forcefully. But of course, already we have inflation north of 9%. We will see another move up in terms of that annual inflation rate this week. And we know that the Bank of England are already anticipating that inflation will go into double digits in October. So if, under those circumstances, they cannot act forcefully now, then I think there are certainly some debating points as to whether they will do by August. And I think the other factor was being touched upon by some of the other analysts you were just highlighting there, that the trade-off between growth and inflation in the UK is particularly challenging. I think we will see that reflected in terms of retail sales this week, which will be very disappointing. We may well see flash services PMI continuing to retreat. So the UK is really facing a very unenviable combination of very fast deceleration in activity and or an inflation peak which will be higher and longer further into the future than most other markets. And I think that leaves the currency looking rather vulnerable, because I don't think the bank will be able to follow through with the degree of pricing that we've seen in markets.
122 on sterling right now, Jeremy. Your expectation then, is there a data point around that CPI print, the inflation print on Wednesday out of the UK? You were talking about double digits, the expectation. Is there a number that would change your view, that would make you more kind of hawkish in terms of where you see the BOE going? Or you just don't think that it's going to be enough, given, of course, those growth challenges that you've outlined for us?
Well, in a sense, you're right, sort of identifying the challenges that were faced by the Fed when they had their own CPI print and their own reassessment of their rate environment prior to last week's Fed meeting. So in a sense, yes, of course, there is a risk factor that if we were to see inflation coming in at a double-digit pace at this meeting now, or at this inflation print, I think it's very unlikely. I think the base effects are not quite so challenging, and we're not going to see the impact of the price cap resetting as we did in the April CPI print. But if we were to see an above expectation inflation print, which we would see 10 as a big figure, then I think that may well cause a market reassessment. But I think it's unlikely in this particular juncture. And as I say, it's not just about the inflation dynamics. I think it's that trade-off with growth that we also need to be very mindful of in the UK. And I think that is going to continue to cause investors consternation about investing in UK assets, I should say, because of the uncertainty in terms of the macro projections relative to what we're seeing elsewhere.
Okay, so how far beyond neutral does the BOE ultimately need to go, in your view?
Well, if we start off with the presumption that neutral is probably around 2%, then intuitively, if you were thinking about dealing with the inflationary pressures in the short term, you would think that the Bank of England would need to go above neutral quickly. But I think because of this question mark over the growth trajectory, I don't think actually the Bank of England will be getting to that neutral dynamic. And I think that's the problem, or the issue that will be impacting in terms of sterling, because the degree of price tightening that we've got priced in, I think, will not be matched by the reality. I think the Bank of England insiders, including Hugh Pill, for example, who is seemingly much more of a gradualist perspective, will not be adjusting in terms of those 50 basis point clips or more that perhaps the market has been pricing or anticipating. Because when you looked at the post-Bank of England reaction last week, there were intuitively roughly 3 50 basis point clips needing to be priced. And I think it's difficult to see how the Bank of England can step up its rhetoric, particularly if those inflation forecasts that we get in August still imply that over the 3-year forecast horizon, inflation will be moving back to trend. Now, the question is whether you believe those forecasts or not, but on the basis of the Bank of England's forecast assumptions, they still expect that inflation will be heading back towards those target thresholds at the end of their forecast horizon.
Jeremy, definitely want to get your views on all things Euro, ECB, of course, the BOJ as well. But before I let you go on the BOE question, the question of sterling, as you weigh up all of these uncertainties for the UK, for the Bank of England, for the Chancellor of the Exchequer, what is your view? Are you able to give us a sense of your view on sterling by year end? Do we get down to 115? What's the next level?
I think we do go lower in terms of sterling, so I wouldn't be surprised if we do see a slide back towards the sort of 116, 117 level over the course of the next few months or so. I think the question also then implies what's going to be happening on the dollar leg of the equation. If we start to get to an assumption that we don't quite see the same degree of reality or reaction function in the Fed, then I think that might just take a little bit of pressure off sterling. So I think once we get down to a sort of a 116, 117 handle, that would probably mark the trough in terms of this move, and I think we will probably then be heading back towards a sort of a 118, 120 area towards the end of the year.
Okay, euro then. Let's bring it to the single currency. 105, gains of 0.3%. Yields on the BTPs are off. Has the ECB done their job, Jeremy, without giving all those details around the anti-fragmentation tool? Is this enough for the markets at this point?
Well, at the moment, it is enough because clearly we've seen those BTP bund spreads coming back from that sort of 240, 250 area that they were threatening in the course of last week. And I think the ECB was clearly spooked by the pace of the move, not just the levels, but it was the pace of the move. But now at least we've seen a degree of retreat as far as those BTP spreads are concerned. If we can remain sub 200, then I think that should provide a reasonable degree of stability in the euro. So I think that will preclude euro dollar breaking down through that sort of 103, 40, 50 area, which I think is hugely important on the downside, because clearly if that level were to give way, then that would open the way to parity dynamics. So I think it is a case that the ECB have probably done enough for now, but the market will be continuing to search for additional clues as to what the ECB is going to do. And so in that context, we will be listening very intently to both Madame Lagarde when she speaks in the European Parliament today, but also listening to Philip Lane when he speaks here in London later on this evening.
Yeah, a lot of voices within the ECB that we continue to listen out for. Jeremy, when it comes to the argument that this will allow them, if they outline and detail this tool, if it's effective, it would give them the opportunity to raise rates maybe higher than the markets are anticipating, and that could underscore euro strength. Do you buy into that view at all, Jeremy?
Excuse me, yes, I would have some sympathy with that particular view. I think if they can preclude the risk of fragmentation really causing a blowout in terms of their policy dynamic, and we can see the ECB starting to lift rates. Now, of course, there are question marks about the strength and resilience of the Eurozone economy, and then you're getting back into the dynamics in relation to the war in Ukraine, for example. But I think if we can see the Eurozone edging rates moving back higher, and I think also more importantly, getting rates back into positive territory, because I think that's an important dynamic, because many of those global reserve managers who actively managed down or reduced their proportion of euro holdings after the ECB went negative, I think would like to see a gradual adoption of that diversification strategy, which would allow that sort of gradual buying back into the euro. So I think as long as the ECB is in a position to say that that fragmentation risk isn't going to blow them off course, and all the external risks of the Eurozone economy aren't overdone, then I think we can see the euro getting some benefit.
Jeremy, just very quickly, your favourite currency pair?
Favourite currency pair? Well, I think it has to be a short sterling trade. So I think it's all about looking at ways to play that negative sterling narrative against the dollar is probably the easiest way in the short term.
Short sterling trade. There is Jeremy Stretch of CIBC. Thank you very much for your analysis as ever, Jeremy. Have a great rest of the day.